Hi everyone, and thanks for joining today. So yeah, let's have a look at today's profit and continue with our arbitrage project on gold. So yeah, let's have a look at the current results on Hyperliquid. So yeah, today we're plus 23 US dollars on our testing account. So today is basically not much is going on. We have a position S&P on GBP USD, and so this is it. So not much going on. Thank you. And on the large account, we're also like plus $22. So it's so again, not much happening here, but we do have like quite a large position on S&P 500, right? So here we are 400. We have a position with 400,000 dollars on S&P 500 and a small position on USDY. And so yeah, the profits, currently we are like up $4,500 for this current month and plus 6,000 in total for this since the start of trading this account. And yeah, not much is going on. So as usual, S&P JP225 USD JPY. And so right now we're trying to add a new account, right? Or also a new strategy. So I'm hoping, to change this public app to have like multiple trading strategies eventually. And so yeah, we're going to add our interactive brokers account or like, our interactive broker strategy as well here. And so quick recap on the current project. So, as you know, we're trying to deploy our gold strategy between MGC Z6 futures, which is the December contract, which expires in December. And we're going to try to arbitrage that against XUSD on MT5. Right, so here again, this is the current basis. And so today, I've already prepared a new server, so we're going to deploy the strategy on our remote server, and so I'm also going to show you the process, how to deploy uh, that strategy. So here we're using our remote desktop to connect to our remote server, and here we're going to deploy our interactive brokers strategy. So here we already have TWS account, but it seems that here we have some issues. Right, it seems like there's a problem with the TWS installation. Let me just delete that and we can like try to install it again. So maybe we click on repair and we'll see if that works. So anyways, so today let's look at the live basis and see like, what the current basis is for today. So here we're connecting to our MT5 account to look at the basis. And so today's basis is basically 58.98, 59. It looks like it's actually increasing. That is very interesting. Let me like open this dashboard still and see what the basis looks like in our web app. So let's have a look at our GC futures, and like we're going to analyze just the Z contract. So let's have a look at GC Z6, and we're going to compare that with XUSD on MT5. So I'm going to apply it. I'm also going to save it for future reference. And so here, yeah, the current spread is 59. So if you look at the chart, it looks like it's increasing. So let's load the historical chart. All right, so I tried to repair the trader workstation. Let's see. All right, we're having this error. I'm going to check why that is. So no JVM could be found on your system. Please define or download JRE from adoptium.net. Maybe you have to install that. Hello guys, welcome to the stream. Nice to have you here. So yeah, guys, so I deposited some money like in my account. So if you look at like this main account here, I have like roughly 2,600 euro deposited, and like we can also like test some live trades today theoretically if you wanted to, which I'm probably gonna do once I fix the situation here on the server. Oh no, I just disabled my browser. So I need to check this error, like why it's happening, right? So here, what it states is like I need JDK installed or down JRE from adoptium.net. So I'm just going to, take a quick screenshot and like I'm trying and let's install that. Hello ASD, welcome to the stream. Guys, so recently it's been like pretty interesting with trading, right? Actually I'm having like a very, very good like profit streak, right? Like maybe we can also like talk about that. Uh like things are going quite well, right? It's not just a research account, like all my trading accounts, also my private ones are going quite well. And yesterday I was like asking myself uh like the question, right? Why are we like uh trying to, researching strategies on entering brokers? Because the question is it going to be better than hyperliquid, right? This gold arbitrage strategy. Because if we like look at the percentages, right, on your 100K account, and like let's have a look at like the entire period. Uh, like the curve is beautiful, right? It's like 6.4% within like 2 months, which is really nice. And like I'm really happy like with this amount of return because that would imply that we might be reaching our 20 to 30% target annually. Uh, and like on the small account, it's also working much better, right? So in total, like for example, on the small account, uh, we are up how much? Like almost 6% in a single month, right? 6% in a single month. And like if we like start from the entire beginning, which is going to be like 7 weeks in total. So this is going to be 7 weeks in total. Uh, this account is 19% plus, right? Within 7 weeks. Like that, in my opinion, is absolutely insane because it's been like 2 months. So if you multiply that by 6, right? Uh, that's maybe going to be over 100% return on a small account, right? And like the only thing like that's like quite interesting is like the like slight discrepancy in profits because here you see we have a 12K account we made 23 today in a realized P&L, and here we have a 100K account we also made 22. So what's the difference? Again, on a small account, we're deploying like more, focusing more on the JP225, which is very liquid and provides much better profits, right? So we can like look at distribution of profits that the illiquid assets on hyperliquid have a much better performance than the more liquid ones, right? Because we can't use our 100K account to maximize, the profits from the illiquid assets. And so I just keep to remind myself, okay, I need to find a strategy that like we can diversify our strategies, right? So have more strategies, not just in crypto, but also in trading brokers, but also to efficiently allocate that capital. Because if we know that Hyperliquid has certain limitations with the capital size, then I need to work on a strategy where I can, for example, open 500 million like within a second or two, right? Because if you like GC futures, one contract on GC futures is worth like 400,000 US dollar with a single trade. So here I don't have to wait minutes or hours to fully allocate my position. And that's why I'm trying to build this system where I can fully allocate my position within a few seconds or maximum minutes and then exit the position as fast. And that way, I believe we're gonna have like much a better performance. Yeah, I think so. So IBKR is going to be like great value because first it's diversification. So in case Hyperliquid will stop working, like we never know, right? Like in my opinion, like it's very unlikely, but I would probably sleep better if I have 2 or 3 strategies running that that perform well. So if one stops working, I still have 1 or 2 other strategies that are working fine, right? Because you could say like, okay, our JP225 or SP500 strategy, or like, let me show you on the server, right? So if we go to our main server right now, as like right now, I still have 3 strategies running, right? 1, 2, 3, but they're still all on Hyperliquid, right? Uh, and And basically, I would like to, also allocate some of my strategies in like the interactive brokers space. So that's my current objective. Um, so that's what I want to say. And like, let's install the TWS platform on the server. So what is it called again? It's adoptium.net. So let's see if we can try to fix it there. So probably and the TWS is running some Java, so probably we need to uh, install something on the server. And so here we have the JDK library. Hopefully that is exactly what we need. I'm just going to, try it and see if that works. So let's like, yeah, here's the download link and let's install it. Like this is just a testing server. It's not very nice. It's quite laggy. I bought the cheapest one, but that's because we're going to test it on like a demo account first, and then if it performs well, I will uh, yeah, I might like improve or upgrade the server later. IB currents offer options and futures and spot. Yeah, that's true. So they're like multi-asset, right? So we can trade options, futures and spot, and ETFs and stocks, and all these other. Like it supports connection to multiple exchanges, whereas Hyperliquid is just one single exchange. So that's definitely an advantage. Where do you live? I'm based in Prague, Czech Republic. Hey, to one question, how is the legal situation for CFDs, Polymar, etc. in Czech? Because in Germany and UK, it's completely blocked searching for a new legal structure. Yeah, this is actually quite interesting because a friend told me last week that prediction markets are actually becoming illegal here in Prague, which is interesting. It's understandable, right? Prediction markets are basically bad for the average retail trader, right? Most traders lose money, and the people who win are just the big players, the market makers, people who already are specialized in that. But for the general public, it's just it's bad. So, like to be honest, as a like moral or ethical citizen, I would say that you should like ban prediction markets because, as I said, gambling is bad and most people go there to gamble, right? Uh, and so if I want to pursue my projects in poly markets, and there's where hypocrisy coming, right? Because I say we should ban it, but on the other hand, I think there's a lot of money to be made, like from the, let's say, market maker standpoint, or like someone with more knowledge and information. Um, I think that you just have to open like an offshore company. I think the EU is going generally against poly markets and so on, but CFDs in general are like quite regulated, and I think CFDs are gonna stay with us for quite some time actually. So with CFDs, I don't think there's any issue. But yeah, I think just opening an offshore company is probably the easiest choice. I think just installed it. Yeah, I just installed it. So uh, let's cancel the installation and hopefully uh, my trader workstation will start. So this is actually quite unfortunate. Can you explain a bit on Adoptium? Like I don't know what that is. I just tried to start my trader workstation. which is running here on my PC, but I ordered this server, and when I install TWS, it is reporting that error. It never happened to me before, which is interesting. So I will need to somehow install TWS here without having these issues. Python's installed already, so we'll see how it goes. So maybe I'm just going to ask Claude like what this issue means. You know, like one thing I realize is like just asking AI like how to fix things works 90% of the time. Like I tried to fix it myself, right, by going to Adaptium, install that, and but it didn't work. So let's just proceed with Claude and see what Claude can suggest in our case. And yeah, so what I want to show you is like the basis increase, right? So here overnight, like yesterday, the basis on gold futures was at 55.8, and it increased to 60, right? So yeah, if we long the basis yesterday, right, that would be a good profit theoretically. Of course, we did not long it because my server was not ready yet. I ordered that yesterday, and yeah, so today we're going to try to run our strategies. But yeah, look at this, like the basis increase here, like it started like around 2150. Did we have any news yesterday? I did not check any news. Let's look at the economic calendar to see if we had any news. So yeah, I'm not very sure. But you know, for example, interest rates have a very big impact on the basis, right? Because then the cost of borrowing and stuff like that is influenced, which directly also affects the basis. Like anytime you trade on margin, right, you have like financing fees, and so if you have to borrow anything, then interest rates also play a major role in the calculation, right? In estimating the cost. Okay, so let's see if like if I won't fix it today, like during stream, it's fine because I still have my TWS account running here, which is okay. It's just a bit annoying because I assumed like this issue never happened to me. So let's show you an example, right? So today we're going to basically finish this trading algorithm, and the aim was to let it run on this server, uh, like forever, right? And then we would then evaluate the trading results by the end of week. Like that's the main point, right? And so it's going to work exactly the same like our hyperliquid arbitrage. So we're just going to hedge two assets, and yeah, excited about the results here. So here we have the live server at 59. And here we have the Bollinger bot. So if I run the Bollinger bot here, right? So, oh no, I have to wait because actually I'm connected to my live account here. Let me just reconnect. I need to connect a demo. Of course, we want to test on demo first. So here I'm going to yeah, turn my TWS account and connect to my demo account. So I'm just logging in off screen. Give me a second. Nice. So now I'm logging to my demo account and we're going to, this is a paper trading account. And so we're going to enable the strategy. So let's run our Bollinger bot. So what this bot does is it computes the basis real time, right? So it takes the difference between GC Z6 futures and MT5. And so when the basis is low, it will try to buy, and when it's high, it's going to try to sell. And so here we also have like this dashboard. where we can see the current live results of our app. So let me disable this one. Um, we also don't need this one, and we can like work purely with this dashboard here to see what's going to happen. So I'm going to split my screens now, and I will show you. And so today we're just gonna take it chill, just try to open a few trades, see if we can make some profits while testing. And as I said, I have already live accounts, the live funds ready. So when I feel comfortable, I will just deploy it live. Okay, so let's split my screen, and here we're going to have a look at our app. Why do you always switch strategies? Like, why did you stop doing hyperbolic arbitrage? What do you mean? I'm trading it. I'm making money every day. The thing is that this strategy, in my opinion, is sort of complete, and all you have to change are the parameters. But I've been trading strategy this entire time, so I would like to disagree with your statement. Like, I'm still trading it, so we're just exploring new strategies because you don't want to uh, just trade one thing hoping that you're gonna get rich with this one thing. I mean, it can happen, right? But I would rather research more and new strategies because I can always say some argument that I shouldn't have never gone to crypto, right? I should have never started with Kraken and then Hyperliquid and other things. But I did, and that's why I found the strategies. And the same way I found Hyperliquid, with this same mindset, I'm going to find new strategies and features that will also provide additional value in the future. So it's not about stopping, it's more about researching new ones. And like if you told me, oh, you could have improved Hyperliquid, you can like do so much more in Hyperliquid. So, but maybe you're right. But if you have a suggestion, then let me know and let me know how I can improve the strategy Hyperliquid, or I can just look for something new. And that's why we're switching. I mean, think about it, guys. Would you want me to just trade on Hyperliquid till the rest of my life and then just see the same things over and over again, or actually do the exciting part about researching markets and always try to find something new? And I think that's the fun in trading, right? The fun in trading, like some people do it for money. I think actually almost all people do it for money. But part of the process, or which is actually fun, is actually running the backtest, running the trading bots, researching if it works, and trying to find many other things, right? And basically, we're still trading the same strategy, right? We're still trading like analyzing the price relationships between two assets, and as I said, maybe we're about to find something better, right? Because I believe that we're going to find something really exciting. So today, like you see, the basis in the morning, like at 5 a.m. was around 57, then it spiked up to like 60, 61. And then now we are like sort of oscillating around 58. So right now my trading bot is trying to like buy at this level and sell at this upper level, right? So this is the logic of the strategy. And what it did is just, oh, it actually exited the position, I think, because we had one unhedged trade. But you can also see like it also displays our trade here. So yeah, I'm going to run some extra improvements. And hi, great broadcast. Thanks. How do you open positions on the crypto exchange, limit or market orders? Uh, Here, I do it with limit orders and specifically maker orders. So a maker order is basically an order that adds like the liquidity to order book. It doesn't take it, and it decreases the commissions by a lot. So we're sort of applying like market making, like we're looking at pricing deviations and adding a maker order to the order book. So it's limited, but you can also do market orders, right? If you see that there's like a big price discrepancy and you want to, aggressively compete for that fill. In some cases, you can also use market orders in case you see like some short-term opportunity that you really need to capitalize it on it now. So market orders, so to explain on the high level market orders allow immediate execution, right? So in a scenario where you see a price discrepancy that doesn't last very long, maybe you want to use market orders, assuming you can also cover for a commission or generate trading fees. Or if you can wait, right? So if you are allowed to wait and add a maker order, that's generally better if you know that you're going to get filled anyways. So these are like the two questions that you have to ask. Are you allowed to wait with that limit order and get filled over time and like that you can afford to be patient? Or is this strategy, are the signals very short-lived? And so as a result, you need to use market orders to capitalize on that edge. Otherwise, you will never get filled, right? So these are the two main questions you have to ask when deciding for limit market orders. In my case, it's market orders because I'm trying to be patient, you know, and just whenever I get filled, and I know that I will get filled for a good price. Do you plan to test level 2 or level 3 data on GC? Right now, no. Right now, I just look at the top of book prices. But I actually started like some order flow project on crypto, which is quite interesting. Actually, let me show you what I worked on last week. This is actually, um, it was like a weekend project where I was trying to stream real-time pricing from crypto, and I can actually share with you now. Hopefully I've pushed that to GitHub. Uh, it's a crypto order book aggregator that I was working on this weekend. And like, you know, during the weekend, the markets are closed, right? But the crypto exchanges are open. So I was thinking, okay, how about I just try to develop some strategies over the weekend and do something also new and exciting, which is like order flow trading or looking at level 2 data and creating an order book aggregator. And so I create a very simple app. I also try to create like a trading bot that trades based on uh, the order flow, but it was just, you know, testing some things. So it's definitely not like working or profitable. But I tried, you know, to create a strategy based on level 2 data, basically. It's not just level 2 data on one exchange, it's level 2 data on multiple exchanges. So now if you look at this app here, it even works, beautiful. The beauty about crypto exchanges is that their data feed is publicly available, so I don't need to sign up or anything. They have like a public WebSocket. So what I did is basically I took like Coinbase, OKX, Bybit, Binance, Bitstamp, Kraken, right? I just, you know, chose some big crypto exchanges, and I'm streaming like the order books for Bitcoin, right? And you see that on the left side we have all the aggregated bids from all exchanges, and on the right side we have all the ask prices. So what you can see is like here in the middle, sometimes they cross. So sometimes like this exchange is like overvalued compared like to this exchange, for example. And like here you can also see like the cumulative volume for this current thing. Here on the right side, you see the trades that are happening on that exchange. So it's like really cool. And I was like trying to like do something like order book imbalance. So for example, if one exchange or like if the ask side has like a lot of like liquidity, right? So for example, on the left side here, we have 160 Bitcoins being quoted on the bid side for this like interval, right? So here we have like group 5 and depth 10, which means like $50 down here we see the depth, and $50 up we see the depth here. And we see that on the buy side we have 150 Bitcoins, and on the sell side we have 120 Bitcoins. So I tried to create like a order book imbalance strategy that if we have like a lot of like a buy wall or pay wall, it would just, you know, assume, okay, because we have a lot of orders here, then let's go short. And because generally when you like trade order flow, like I never trade order flow, right? But this is just my sort of, let's call it general knowledge that I learned online, or assumptions, right? That if you have a lot of limit orders here, it's more difficult to push price up. because there are more sellers, right, waiting here. And if there are not many buyers, you can just like sell and hoping that, you know, the sellers will push price down even more. So basically, just standard overbook imbalance thing, and it still needs a lot of like testing. So like this type of trading will require testing on level 2 data. But the thing is, I'm using level 2 data from multiple major exchanges. So I need to aggregate all that order flow into one single stream. And it's a big project overall. So right now I'm just like saving the data, visualizing the data. And then when I get back to this project, maybe this weekend, I'm going to, yeah, to work on it more. So like order flow and level 2 data is something that I'm also going to pursue later. But of course, I want to focus on my main strengths, right? So my current main strategy, of course, is the arbitrage trading between perpetual futures, classical futures, synthetic futures with options is also a big project I'm planning to do. And maybe eventually, if I learn how to work with level 2 data and how to read order flow and order books, we could also try to implement that into like our arbitrage strategy, right? Maybe we can like predict when these like spikes or discrepancies happen. So I think by learning more about level 2 and order flow, we can also like combine like two, let's say, separate uh like two separate projects, and maybe we can like find a place where these two strategies can like sort of work together. So right now, like while I run this app, of course, Binance is the largest crypto exchange. So you see that the BTC against USDT has the highest cumulative volume while I was talking about this app. Then Binance, this is like Binance spot against USDC. So this is both Binance and the OKX, Coinbase, and Kraken. And over the weekend, actually, Coinbase had higher volume than OKX. I think it also depends, like, based on the uh, like session or whatever. But Binance is definitely on the first place. So if you want to run a strategy purely based on Binance data, I think Binance already provides like so much data that you can sort of disregard the like smaller crypto exchanges. Hey bro, what you're doing? So right now I just showed like a side project that I did this weekend, which is like this order book aggregator from major crypto exchanges. I was just bored this weekend, and I didn't, sometimes when I'm bored, I do things like this in my free time. But we still have like our main project, right? So because this is cool and looks nice, but I don't know how to make money yet, right? I don't know how to make money with this. Oh, we got filled right now. So our trading bot went into a short position. We went into long position here on XUSD. Um, oh, you can actually see what's happening here, right? So here, what happened is that the basis spiked up here, right? And so it decided to sell at this level. So this is pretty nice. And then like if the basis drops back to this middle level here, it will then try to exit. And so we also need to show the P&L later today, but it is sort of working. But yeah, so just wanted to share, some other projects that I'm working on. But usually these projects are just, out of my own curiosity, right? Because I'm just a curious person. And like many times I don't know how to, extract money or value from that. But I guess maybe some trading firms or exchanges. I mean, I assume that a lot of trading firms already have an app like that where they aggregate all the overflow and look at that. But maybe sometimes they don't, right? So just the data itself is valuable on its own because you can only research on data, right? You can only research on things that you see in front of you. And so if I want to research on level 2 data and order books and order flow, this is definitely the requirement to at least start, right? So I put a big emphasis on data basically because without data we can't do anything. Uh, the things I can actually share this app publicly, right? I think I can because this is a public WebSocket, I think I can deploy this for members for fun, and maybe you guys can have a look at it. Maybe I can add like a simple API connector to that, and like maybe you guys can tell me how to make money, by looking at the data here. Maybe I'll set up a simple database so I can like save like snapshots, maybe 1 second snapshot of the order book, maybe 100 USD deep, right? So if we want to increase the depth, we can like group the price in tens, right? And here the depth is 10. So here we have like $100 down and $100 up in the order book. Is it free for a crypto order book? I'm using Sierra chart delay data to download my order flow data on CME and COMEX, and I'm still new. Well, this is the public WebSocket from all these crypto exchanges, right? So Kraken, Bitstamp, Binance all have public WebSockets. So if you want to check the data from these exchanges, they're public, and you can like it took me like 1 or 2 hours with Claude to finish this, right? So actually it took me 3, but it was basically done in one. You just tell, hey Claude, I want to connect like to multiple crypto exchanges and create an order book aggregator and display the trades. And so I just gave Claude this very simple instruction, and this how I get the data. Of course, if you trade on CME, right? So then they don't provide that. Then you'd have to subscribe to a data vendor that provides CME access. So that's separate. But I also like displayed what you can see here is the MT5 bid and ask. So I was like trying to run like sort of like an arbitrage strategy on MT5 because MT5 is quite cheap. So what you can see here is that MT5 ask price is like below this fair price that I've computed. So in theory, I could try to buy here on MT5 when MT5 is like below this fair value, and then when the MT5 bid crosses above the fair price, I can try to sell. So basically, I'm just trying to buy below the fair value and above fair value. So this fair value is computed by taking just the volume weighted average of each level, and then we're computing the average here basically. So based on this app that I made here, the fair value of Bitcoin should be 64,029, now 30, right? And so if you see an exchange that's heavily overpriced or underpriced, and I believe there are a lot of like HFT firms that already try to, arbitrage that already, but you see that some exchanges cross above this fair value and below. And like for me, trading Bitcoin is still quite expensive, right? Because I don't have the low commission tiers and so on. So, but you can see, that the pricing on different exchanges varies exchange by exchange, which is like very interesting to see. Because what it means is that on one exchange, for example, here the green line, it's Bitstamp, their Bitcoin is like undervalued compared to the bid price here, right? And it's not just like a quick snapshot, it like lasts seconds to even minutes, right? So always some of the exchanges they cross below the fair value and some of the exchanges they cross above the fair value. And it depends like also on the depth, right? Because there you can apply the depth, on like a small interval. So here you would have like on this interval you'd have like stronger like sell pressure, but if you look at the higher level, right, it's more balanced, right? So it so depends on the microstructure and the depth that you're applying, and this is all like science to me that I still don't understand exactly, but that's a fun part in trading, right? And now the dude asking why are you talking about level 2 data and order book aggregators after switching from Hyperliquid to TWS, and my answer is it's interesting, right? It's just fun to do these things, and without me being curious enough to do Hyperliquid, I would never have started here. I would never do this, and I would have never done that. But the truth is, I'm doing all of it, and that's the reality. Why it's called ATJ research and not ATJ. I'm just going to trade one strategy till the rest of my life. Why sell there? What's the strategy? Oh yeah, so here we're computing a Bollinger, right? So this is a Bollinger Band. I removed the Bollinger here, but basically this is the basis chart between GC futures and XUSD spot. So when the basis here is high, it means that futures is more expensive than the spot price, and when it's low, then it's like less expensive than the spot price. So we are like selling futures and buying spot. Oh, and I see that we already exited trade. So we sold here, this yellow line, red line. I need to remove the hover thingy because it's a bit annoying, but we sold here and then we exited here. And so if I check the trades or the fills, I think in theory I should be in profit, but I had like one trade also being here. And so we'll have to check. Yeah, the thing is like I left one position open sadly, and but we can check the fills and see if we got a good fill. So how do we check this? Like I could ask Claude to run analysis on the fills. Again, here we're selling again, right? And then here we're buying on XAUSD. So yeah, so the strategies are working. But as I said, like I still need to work on like these spikes here, right? Because this is like real market data that you see here, and these are like spikes from the historical data from Data Bento. I think there are like some inconsistencies in the data that we see. Like they are correct most likely, but I just see these big spikes, and in my opinion, they also like increase the standard deviation. So maybe the standard deviation higher than we think, which should be okay because we're interested in the average to at least compute a fair value here. So we sell here, we buy here, we sell here, and we're gonna see the results later. I think the best thing is like not using the calculator, but I should just export the data and look at the average fills, and then I can like have it in like a spreadsheet, which is going to be nicer anyways. Okay, so that's it with the Oribo aggregator. I'm going to deploy this app live, so you guys can like have a look at it, right? Maybe I'll add an API endpoint so you can stream the data for yourself, and like eventually, when we'll have time or when I'll be bored, I'll keep working on that project sometime later. All right, so I think basically what I can do in theory is I can just tell Claude to copy this dashboard, right? I think it's the easiest thing that we can do. Like if Claude can like take this dashboard, copy that, create a P&L report for that strategy, that would be the easiest thing actually. And I don't have to invent new things. I can just add interview brokers 25 in this dashboard, and it basically does the same things. It shows the open positions, the commission, the P&L, and later I can also show the historical spread and stuff like that. Honestly, I don't think there's a real edge anymore using price ladder order book unless you're in a mega HFT firm. Well, you might be right. I mean, like, most likely you're right. But we have to also think about like one thing, and that is that actually I can prove you wrong. Like I can tell you I can make money off of this because I did that in December on Kraken on the spot, right? So what I actually did, like this is like I just did a very basic market making strategy on Kraken, and there the average spread on Bitcoin was like 30 or 40 USD. So maybe let me just say it like that. It's difficult, but it's possible. And eventually, if we come back to Kraken, right? I've never shown you like market making on spot because on Kraken you need to have 10 million monthly volume on spot to make money. Like to have zero commission, and then you can do market making for free. Basically, you can actually make money on these exchanges, and it's not that difficult, right? It's not like people assume you need to be like an HFT firm, have super expensive setup, and this is like what the HFT firms want you to believe because they are the ones making money from these arbitrages or market making strategies, and like they keep the edge for themselves. So what if I told you that even you could do that, right? Assuming you have like certain amount of capital and you can reach certain commission tiers, but just strategy wise or fill wise, without if we ignore the commission, it is actually also possible as a retail trader to generate profits. Again, assuming we don't pay any commission. But if you know you can make money uh, purely based on the fill, then you have enough skill sets to also make it in like a company that has large capital. This is sick. Appreciate you for sharing. I'm going to look into it. Yeah, thank you. Does the order book aggregator really work? Well, the question is like, what should the order book aggregator do, right? What's the purpose of this aggregator? It's just data. So maybe depending on the strategy that you deploy or the strategy that you backtest based on level 2 data, you can use it for any type of strategy. So I can't answer if it works or not. Obviously it works because it displays the current order books from these exchanges, assuming I made no mistakes in the by integrating these individual exchanges. But it depends, how you apply that information, right? So this is just information, and how you apply it depends on your strategy. And I can't answer that for you. You can only answer that if you have your own strategy tested on this type of data. Is it still open to trade on arbitrage for gold spot and futures? Yeah, right now it is running. And like I need to create like a nicer dashboard for you guys to basically look at the things, because right now what you see is like a dashboard doesn't like really look that nice. So here what it did is like it's sort of like you can see we bought here, we sold here, we bought, we sold here. So we're buying low, we're selling high. But again, it's on a demo account, so maybe also it might not be as accurate. But we see that here it buys and here it sells. And I'm going to tell Claude that here this thingy is a bit annoying, so I will want to like disable the hover card. Can you disable the hover card? It is quite annoying, and I can't chart the basis dashboard.py. Again, it's also like still a demo account, right? So I don't really trust uh, the actual execution. So we're just testing the logic right now. And so if I'm happy with the logic, then we can like actually run a test on the live market. Right, so here is my crypto order book aggregator. You know what? I'm just going to share a code with you guys. Like this is like nothing like too sensitive. So later I can just upload code. You guys can try it for yourself, or I will just create a web app that you can visit and like see for yourself. Again, I'm not an order book trader, so I don't really know how to apply it yet. But you guys are also smart, right? A lot of people who come on the stream, they give me like very, very good advice how to do things. So so always like new ideas are welcome. Okay. Looks like we're getting a lot of cells. And so here the average entry is let's look at the data I have here. Well, we'll need a lot of improvements still. So I disabled the hover right now on this chart. But you get the idea, right? You buy when the spread is low and sell when it's high. Like this is the entire idea of this strategy. And then like you can see here that like on the demo account, we actually made a profit, right? So the total P&L is like plus 141 right now. So we're actually making profit on the demo accounts, but I don't trust demo execution. Like there's so many things that can go wrong actually. Yeah, usually people test on demo and then they're surprised it doesn't work in live. So I'm always skeptical, right? Until I see the results in live, I don't believe it. I don't believe the results, right? But I know that the logic actually works. So one last thing I need to fix is actually, oh, we're getting actually a lot of fills now. Okay, the app is loading. Takes quite some time to load. Is there still any retail alpha out there on low capacity strategies that require HFT trading? It seems all alpha has been taken by institutional players, right? Funding rate arbitrage, commoditized by Athena, etc. Uh, well, I can only speak for myself, right? I can only speak for the strategies that I've developed, and they do make money. So I believe that there is still a lot of edge that you can extract as a retail trader. Like after trading for so long uh, and running strategies, I realized that retail traders have a huge advantage, like especially in hyperliquid. Uh, like what I learned in hyperliquid is that because the liquidity is low, my my hypothesis is that the large institutions, they don't care about making a few hundreds of dollars or maybe $1,000 per day, right? For if I made $1,000 per day, of course I'd be super happy. But for large companies or hedge funds, it's almost nothing for them, right? So they might prefer to stay, you know, where the big money is, right? Which is like still with the traditional exchanges like crypto exchanges and like CME exchange or the stock market. And so on these trust exchanges, I see that there's like a lot of inefficiency, and like we've seen that over time that there's a lot of inefficiency. So I think it's all about like choosing the correct market where you can find these opportunities. Because for example, if you trade the S&P 500, right, on the CME, on interactive brokers, of course you're going to compete with the best market makers, the best players, the best arbitrageurs on this planet. Uh, but if you trade S&P on Hyperliquid, where you have huge price discrepancies, then it's easier. So I think choosing an easier game is an important step, right? Like a lot of people, like maybe I think it's also like an ego thing, like where they just say, okay, I want to trade like the big players. I want to be like those professional traders, right? But it's very difficult, and most of the time, like you can't compete with these people, and like accepting the fact that you might not make money in a certain market is okay. So we should actually focus our efforts and strategies on markets where we can excel the most. I think that, in my opinion, is like the answer question. Is there still retail alpha? I think yes, you just need to find it. Sometimes you're like trading only CFDs, only on MT5, right? You're trading against a market maker. You're trading OTC product where you have marked up spreads and swaps and so on. And like a lot of people don't realize that they can trade these assets somewhere else, maybe like on an exchange trading, on an exchange, right? So then maybe the next step and upgrade is interactive brokers. And like I don't like recommend trading DEXs to everyone, because decentralized exchanges is like something new, and I understand there's a lot of risk and skepticism still involved when you trade crypto. But I think also keeping an open mind is a big advantage, because what have we found out that has sort of revolutionized trading this year? And I think it's of the tokenization of stocks and commodities. So for example, PAXG is now tokenized gold now. You can trade crude oil and hyperliquid, which is like still very popular with very high volumes. And so if you look like at like these new opportunities, I think that's the best way to find an edge. Just look for something new where the big players are not yet established, and try to apply those simple strategies there, because our strategy at the end of the day is not very difficult, right? It's so simple. You just look at the pricing discrepancies between two prices and just enter and exit whenever you have a good price, and it's not that latency sensitive. My strategies, they can have like even a 1 second execution delay and they still work. Like think about it, 1 second execution delay, but they still work. So it's not about like being fast and having the most expensive equipment. It's just about understanding when is a good time to buy or sell. And if you know that uh, the execution time is not that crucial, you know that you have like a very robust strategy that you can trade for long term. And then like the problem is like eventually maybe if a lot of like market makers join Hyperliquid and pricing will become more efficient and more competitive, then that might become an issue in the future. Uh, but then what's the next move? research new exchanges, new strategies, and just improve the things over time. Find new things. Use Opus 5 for simple tasks, man. Yeah, I thought that too, but I never reached my limit to this day. But I guess Opus 5 is also like much faster, so I think I should. So thanks for the comment. Profits really just start with real account as soon as possible, please. Well, I understand you want to see live profits, but the live trading will be ready when it's ready to be live. I wonder if people are more interested in the live trading results or the actual strategy. Because to be honest, the most, like me personally, like the most valuable part, if I had to watch my live stream, is actually the coding and backtesting part. Because doing the live trading bot and deploying live is probably the most exciting, but you don't get as much value from that because you don't know, how he coded or what the strategy is. Could you please recommend which platforms are available to US residents for arbitrage trading and what types of arbitrage opportunities they offer? Well, in the US, I assume that CFDs, they are restricted, right? So you can't trade actually you can trade CFDs, but they require a US license. Okay, nice, this works. And so the one exchange I use is Interactive Brokers, right? So on Interactive Brokers, you can trade futures. And I think the futures against spot or futures in CFD arbitrage is like my main specialization. So I can like maybe recommend that strategy. And like I also like sign up with Coinbase this month. So on Coinbase, like a lot of these crypto exchanges, they adopt these tokenized assets such as X stocks, PAXG. So you can trade, let's say, stocks or commodities 24/7 on a crypto exchange. So if you find any crypto exchange that can have offered like these assets, I think you can also run arbitrage strategies between, for example, crypto exchange and Interactive Brokers. So you have these options available. Why you have 1 second of delay? Can you fix that? You mean delay in the live stream or delay in what exactly? How much are you actually making per day, mate, if you don't mind sharing? I don't mind sharing. Like right now here I have my public track record. So I'm not gonna talk about my personal accounts, but here this is the one I share with the members here. So all of the strategy, for example, this 100K account that you see here is like my hyperliquid strategy running on the server. And here I have my right now JP SP500 and so on running. And so you can find my profits. I started sharing my live track record last month, right? So we started somewhere like in June, and so today is the 5th of August. So this is like my current track record. So over the past 2 months, I made $6,500 on this account. And like you can like come to this app and like see the daily results and check it for yourself. Also, I have like a small testing account, but it's more for testing purposes. But you can also like have a look at that too if you want to. How do you think AI will change retail trading now that everyone has access to coding? Won't everyone eventually test everything? All right, sorry. You should try ChatGPT 5.6. It's much better, I think. I haven't tried that, so thanks for suggestion. Like I already got like a recommendation. I use Opus 5. I'm probably gonna do that when it's gonna be like a simpler task. So yeah, I can actually switch today and see if and see if it actually saves time and like still provides the things that I need. So back to the question, how do you think AI will change retail trading now that everyone has access to coding? Won't everyone eventually test everything? Uh, I mean, yes, I think like the coding part is that like for me, the biggest advantage of AI is that I'm able to focus on the backtesting, on the research part, right? Just trying to find an edge. And when it comes to writing the trading strategy, it's just a few prompts and you like have a sort of working trading bot, right? And I think uh, it like breaks the barrier because a lot of people are like very smart, right? They like have very good ideas, very good strategies, know how to, define trading logic and so on. So I think a lot of traders now, because they don't need coding, they can actually like translate their idea into this automation themselves using AI, right? Because they're smart, but they don't know how to code. So now it's fixed. Second thing is that AI does like the research or finds a strategy for you. And this is a topic that I'm not very uh that yeah, I still like to like research my own strategies. So it always like I always try to, figure it out like myself. And I haven't used AI to like, hey, Claude, give me a proper strategy, right? I never tried to do like that because I feel like uh this way of thinking like will not get you very far, because I think part of being a good trader is also understanding why a strategy has an edge, why it makes money, understanding the risk management, having the emotional control. So the crucial skill sets in trading are still there. It's only the automation part or the translation into actual code. And so I think very beneficial for some people. But if you don't have the basic trading skill sets, I think you're still going to struggle. CFD or features CFD or features arbitrage. How do you recycle money back forth from crypto cash like IC markets? I just withdraw. So IC trading, they allow USDT, I mean USDC deposits and withdrawals. So I can just, I can show you on this server here. I actually have a monitoring. So here I monitor my balances, right? So here on Hyperliquid, I have 60,000 in balance. And here on MetaTrader 5, I have 62,000 in sorry, in equity. So here 60,000 equity, 46,000 in equity here. So when one account exceeds this 35% or 65% like limit, for me that's a signal to withdraw, and I just withdraw via crypto and either deposit to MT5 or deposit to my Hyperliquid account. And when you said delayed execution, you said your execution is 1 second late or something. Oh, that's what you meant. No, like once I had a bug on Hyperliquid where I refreshed the order interval every second. And so my limit orders update every second, which means they could be stale, they could be picked off, but I still made money during this period. So I know for sure that as of this moment, Hyperliquid is not latency sensitive. So of course, you want better execution time to improve no the performance, but I know it still works. So what I try to say is like you don't need expensive gear and the fastest data feed to make money, right? You just need a good strategy, right? I'm in the price action mentorship program, more than 3% success rate, 50 equipment rate. Cool. Do you have a Discord? Yes, I do have a Discord, but I offer it to my members only. So on my website, like here, I share my code, train strategies, and apps, and part of that membership, which is monthly, I also offer access to my Discord community where you can like connect with. How do you manage the slippage brokerage between different exchanges? Easily. So when you do like live testing, right, and you look at the execution, you just need to see if you're getting filled correctly, right? So slippage is actually best measured when you test it in a live environment. And if you see that the trades perform well during live testing, then you know you're good to go. That's the main thing. And so if the execution is bad, then you should work like on things such as latency, like co-locate with the broker servers, maybe have faster data feed, and like a lot of factors that can like affect the slippage. Or maybe there's just a thin liquidity on the taker side. So when you set a market order to hedge, you might get slipped too. I think like if everything is okay during live testing with small sizes, then you can like slowly increase and just monitor the slippage. So usually I'm not worried about slippage too much if I know that during live testing it worked pretty well. And if it stops executing well, then I will know for sure, because then I'll probably be in a loss or break even, and I know that I have to optimize something. Is that real or play money? It's real money. So all of it is live here. Why Discord ban paywall? You can create a paid community, a private channel in same server. Well, I just like to focus on the people who actually value what I do, right? So I used to have like my Discord available publicly, but the problem with that was it had too many scammers, too many people asking too many questions, and I like to focus my time to people who actually value that. And like right now, even though I have like 50 members right now, it's already quite a lot of work, right? So that is the main reason why it's not like public right now, or will be. When you start with strategy creation, not sure what you mean with that, but right now we're creating the strategy on GC futures. And what is your max drawdown actually? If you're referring to this account here, so here are the drawdowns. Like sometimes you can have like floating drawdowns, right? Because you know, your positions, your floating positions can go into negative, but because it's a hedge positions, the drawdown is actually very small. So I wouldn't say that like on this equity curve or the P&L curve, the drawdown was higher than $500, maybe $1,000 max, right? Like I don't observe that, but based on my experience, when I look at the unrealized P&L, it was never higher than $1,000. Actually, so let's proceed with the suggestion, and we can actually change to Opus 5. And let's see if we'll have better performance here. Okay, so let's look at this dashboard. So what I'm going to do is like every time restart this dashboard, right? Actually, I can split my screen. So every time restart a dashboard, my app needs to load the history again, right? Which is quite annoying because it takes like a minute until the app starts, because you know it's just that much data. And so what I'm going to tell Claude is we're going to copy this path reference. So in our dashboard, can you save the history so during restart it does not take that long to load? And then if data is missing, just load data for the missing period. So yeah, so basically I'm just telling Claude, okay, save this inside some CSV file, and then when we restart the app, don't use the API again, and then we should load faster. And it will be also easier for our development, because every time I restart, I have to wait a minute until I can actually start doing something, right? Why on that funding rate strategy, the one with 100K account, you only run these assets like NVIDIA, SPX, etc.? Well, it's just based on, well, first of all, I'm a lazy person, so I just like to deploy a few strategies that I know that perform well. And just based on the experience and my backtest, like I know that SP500, looking like at the history of the account, and I've traded for, right, it's good for this like 100K account, because you need a lot of liquidity, right, to allocate that position. JP has very, very good performance, but on like but has low liquidity, so a lot of times I won't get filled fully, but it provides very good results. And then USD and then, yes, I could deploy other strategies too, but as I said, I'm a lazy person. I just prefer to manage 3 strategies rather than like maximizing like 10 at the same time. And it's also like more simple to manage basically if you have a few rather than a lot. Try perhaps some logic like caching for the data so it's easier to load, something like how IGN TikTok works. Yeah, correct. So what we're actually doing is caching, and I'm like doing a cache in a CSV file basically, and like you could do memory cache, for example, or but the best thing actually that I should do is just set up a database, right? Long term, I should just create like a MySQL database and save it inside that DB. What is I think DWS means drawdowns. What is drawdowns you mentioned earlier in the stream? Is it an exchange? Well, the drawdowns here, as I said, is on this account is like very low. Like again, the floating positions can be minus sometimes, right? But I haven't had the floating drawdown larger than 1K, right? So here, let's assume like $500 or 1K is maximum drawdown I've experienced here, but it's not the realized one. Of course, like when you look at drawdowns, you also want to look at the unrealized drawdown. Uh, but most of the time, like this type of arbitrage is in profit very, very fast. Because if it's not in profit very fast, then probably there's an issue with the strategy in the first place. Do you also use option strategies? No, not yet. But I want to do like synthetic futures arbitrage using call and put options, right? So you can structure like a synthetic future with calls and puts. So this is a strategy that I'd like to, focus on eventually once I'm done with this. Sorry, I meant to ask, what process do you follow for strategy creation? I use discovery sample, sorry, then one shot test and go from there. If it fails, I don't develop any further. Well, like the main, like first, how do I design strategies in the first place, right? So I always try to compare pricing between two assets, right? It can be like a CFD against futures, or an ETF against CFD, or a crypto perpetual futures against a CFD. So always I try to think of, okay, gold. If you want to trade gold, you have XUSD on MT5, you have GC futures on Interactive Brokers, you have tokenized gold, which is PAXG, for example, which you can trade on Hyperliquid, right? It's XPAXG. Yeah, we just need to go to perps here. So Pax Gold is tokenized gold. You have gold perpetuals. And so all I do is just I compare the pricing between all these assets. Now example is gold. And so if I see any price discrepancies that I can like arbitrage, then I start with some back test, then live testing, write a trading bot. And if it works, it works. And if it doesn't work, then I go next, right? And then it doesn't have to be gold. It can be Bitcoin. Then it can be a stock index like the S&P. It can be like literally anything. So you just need to put one asset into like a basket that basically all reflect the same price. And so if you're able to identify that and compare pricing, then it's all about, oh, this asset is quite overpriced. This asset is quite underpriced. And then we just buy the cheaper one, sell the more expensive one. And that's the entire process of me developing the strategy. Have you considered trading a poly market? Yes, I have, but uh, poly market is like so entirely different from what I'm doing here, right? And and now like recently it's been banned in my country, so I'm actually a bit more discouraged to try poly market now. Actually, this reminds me, I have to like withdraw $100 because I have $100 there. Uh, so yeah, probably I should rethink, how I want to approach poly market. Because if in the future all the countries like ban poly market, pardon, like they can't like I like, yeah, you can ban it, but you can still trade there. But because people are actually discouraged from trading it because countries ban it, then it might not be like as attractive, right? Okay, so let's look at the results here. So we create a cache for this app. So let's restart this. So I think it still needs to load the first cache, so it will still take some time to load, but now we can test it. So every time we restart this app, it shouldn't spam my API from Data Bento, and it should just show the data. Which exchanges are you trading now besides Hyperliquid FT5? Missed some streams and vacations. Yeah, enjoy vacation. Hopefully you're somewhere warm and nice. Actually, it's already warm and nice here. It's 37 degrees outside. I'm lucky to have like AC in this room. And right now I'm focusing on futures through interactive brokers. So I'm trading also at CME now. Would you want to try that also in Deribit? I mean, it should work. Like all crypto exchanges, they work the same. They're like spot crypto assets and perpetual futures. So whether it's Binance, Deribit, Kraken, or like a DEX like Hyperliquid, they all have like the same assets and pricing mechanisms, right? All they differ in is like maybe their flow, like the type of clients, the fee structure, and things like that, and also like the rebates for market makers. But uh, the strategy that you would apply would be same across all crypto exchanges basically. Okay, so now we loaded the chart. So let's restart it. So you can see like we're like making money, right? So based on like you can see like here we're executing some trades on interactive brokers. We're executing some trades on MT5 here. And so our report says that we are making money because we're buying, like we're selling here because that's a signal. We're selling at this level and we're buying like around this middle price here, which means that I can slowly proceed to like live testing on a small account. And like even though like here the spike is not here, just remember it's just like a price snapshot. So there is a high chance that we actually like get filled here. And also I also need to check if these arrows are actually correct because I didn't check it yet either. But I assume they work, and like before testing live, I'll double check again. So for example, would MicroStrategy count as Bitcoin Reflector or is that too separate? I don't know, like again, like with the crypto or like if you're like still trying to talk about the order book aggregator on crypto, I don't have like any specific strategies that I can confirm that do work because I have never traded that, so I can't really answer that. I'm really skeptical about the online influencers. Can you give any tips to identify the real ones from these scammers? Yes, my first suggestion is that 90%, 99% of all people who are online teaching trading don't know anything. So you come to any live stream and you start being skeptical from coming, right? And you shouldn't care about the profits they mention, right? Like I think profits are the things that lure people in, but profits don't tell or don't say anything about the knowledge or the skill of that trader. So I think it's more about like trying to ask like important questions like how does your strategy work? What's your risk management? And if the trader says I trade ICT, immediately run, right? ICT, you hear ICT, you run. Um, and and so I'm not a manual trader, right? I don't know how to trade manually. Like I can try, like I can try to draw some lines and patterns, but I don't like. In my opinion, most retail traders who draw lines on chart and never show their track record are just a bunch of scammers. So track record is actually a good point. Like ask for a track record, or like if they send you a track record from one account, like you don't trust a single track record, right? Trust like multiple track records or extended periods of time because they can also be easily manipulated nowadays, right? If they send you the results. Like if you ask me now on live stream, hey, I don't believe you're a scammer, your Hyperliquid account is just some numbers on the dashboard, I'll happily just, export my trade history and send it to you. Like I don't have an issue with that. But yeah, probably this is my advice to deal with scammers. Okay, so let's refresh. It still takes quite some time to load, but not as long. Nice. So let me restart this dashboard again. Like before, it lasted like 1 minute to load this app. Now it takes only like, I don't know, 10 seconds. So let me. Oh, it actually still. Actually, yeah, it didn't take that long actually. Because we're dealing with 1 second like BBO snapshot, so it's still a lot of data that has to be processed, even like if we have the data saved already. But yeah, this is fast enough, I think. I missed a comment about Deribit. Yeah, maybe if you scroll back, you'll find it. Are you afraid of being copied? Actually, no. I would love if people copy me, right? Because it means that they trust, uh, believe that what I'm doing works. And so this is how I, start like a long-term relationship or cooperation with my viewer or trader, right? Or someone who just wants to follow me. Because trading, uh, like what I'm showing you here, like sounds or looks very advanced or like special or like I shouldn't share, but these trading concepts that you see here are like nothing new. Like they've existed for tens, hundreds of years, right? Not hundreds, I don't know. Like ever since electronic trading was available and you had like automate trading with market making and so on, uh, these strategies are nothing new. All I'm doing is just sharing what works and then applying it like to the current market state. So maybe market making was more attractive like 10, 20, 30 years ago, the classical one on stocks. And because it's very competitive, now we have to apply it maybe on futures against CFDs, because CFDs are also like quite new, right? CFDs are like still uh, didn't exist for that long. And now we have like crypto, and now we have DEXs, and now we have tokenized stocks and so on. So we're just applying strategies that have always worked, but just to a different market, right? A market that's always evolving and adapting. I prefer gap value astrology, LARP strategy, lol. You forgot to add moon cycles in your strategy. I think that's why it doesn't work. Like during full moon, I can run a backtest based on moon cycles, and I can give you a profit backtest. I bet. But that's not what I'm gonna do. Okay, this works nice. Can you make the buy sell horizontal lines thinner? Do they also adapt, update, uh, periodically? Hello, Harry. Welcome to live stream. Uh, we're up. We're up by a lot. So we're up $6,400 for the past 8 weeks. It's amazing. I'm actually becoming rich without the members, but you guys make it more fun, so I don't mind. I realized like one thing about trading. I don't want to like sound bad in front of the members who watch it, but I think uh, if you just focus on trading and your own research and just yourself, right, and provide like the membership services just on the side, life is actually much easier than always having to be, oh, I'm going to teach you that, oh, buy my course, oh, please come subscribe, oh, please come here to my website, right? It's and so what I'm trying to say is that as long as I just trade, do what I do, just trade, make money in trading and do well, then I think the members also benefit. And it's more like, if I do well for myself and like do all the research, then others benefit too, right? And so sometimes if people just come to me, oh, can can you make a webinar on this? Can you answer these questions? Of course, I will answer questions, but it's more like focusing on the things that I want to do is usually always the better thing than always trying to listen to suggestions. I want to learn this, I want to learn that, because I used to be like that maybe like 2 years ago. I always tried to deliver content based on what the viewer wants to see. But I realized one thing, a lot of times, sometimes what you want is not what you need. And in my case, I think I would just show the person the thing that I see as valuable, rather than uh, focusing on things like, example, polymarkets, right? I promised to people maybe 2 months ago that I would do polymarkets content, and to this day, like, again, I don't know how to make money polymarkets, so I don't feel like teaching people something that I don't know how, I don't know how it works, to be honest, right? Like all this binary option pricing and stuff like that, it's all like a mystery to me. Of course, exploring, researching is fun, but making money, no, I can't do that. Okay, so that works. What are some ways we can learn as beginners? That's a very tough question, because when I started, or maybe I can share a story how I started, as a beginner. Like before the entire AI thingy, let's restart again. Let's see if this works. Like before the entire AI, I had to learn how to code, right? You don't have to learn how to code anymore. So I think as a beginner, you should learn what strategies work, right? You should like choose a strategy that you know is proven backtested. Wow, nice. Look at that. Profits. On a demo. This is demo, right? Don't be confused. These are demo profits. But yeah, you need to choose a strategy, right? And the strategies that I teach, I can only tell you what works for me. What works for me is a cross-exchange arbitrage, right? You compare pricing between MT5, Interact brokers, a crypto exchange like Hyperliquid or Kraken and whatever, and you need to understand why that strategy makes money. And so then the second part is, okay, I have a strategy and then I have to apply it on a certain market. So the way I design strategies, like a lot of people like ask me the question, does this strategy work in Forex? Oh, can you run this strategy on Bitcoin? Can you run this strategy on S&P 500? Right? And this is not how it works. How it works is that like you have like a framework, let's say a statistical arbitrage or like a classical arbitrage, whatever. You don't choose the market, you don't choose the symbol where it works. You have a strategy and you have to look for the market to see where it actually works. So so if you ask, does this strategy work on Bitcoin? I will tell you, yes, it can work on Bitcoin, but sometimes it's not as good, or sometimes it's too competitive. And uh, so that's what I'm trying to say. Like, don't try to be the type of trader who says, I'm gonna be a Euro USD trader trading on the 5-minute time frame. I'm gonna trade just these lines or these retracements or whatever. Uh, this is not how trading works. It's more about understanding why there's an edge in the strategy, and then look for the assets that actually work. But what I'm trying to say, like, yes, it can work. Like, for example, if you just trade gold or just trade Forex, then sure, you can design a strategy that's only dedicated for a strategy. But in my case, I'm talking like what works for me is that my strategy is like a general framework that I apply on all different markets, on CFDs, on futures, on crypto exchanges, right? And so I don't choose a symbol, I don't choose a time frame, I don't choose anything. I just see what works for my strategy as of this current moment. Uh, What is a strategy return on investment? Okay, again, same question. We are 6% over the past 2 weeks. Again, you can check my public P&L dashboard here. So I share my public track record, and in P&L report, you can see all the profits for each individual day. What is the max volume I can trade your strategy with 1 million? Well, the strategy here that I'm trading right now is on a 100K account. So I can only say that it should work on a 100K account. If you add like 200 or 300K, I'm not sure how rich you are. If you have 200K, you're probably rich enough. But I think it should work like up to a few $100,000. Um, but again, on crypto exchanges, the liquidity is very limited. So so it might be an issue on crypto. But if you like move to a centralized exchange like Binance, it could work much easier. But what I'm working on here is like trading this arbitrage. This is a demo account on GC futures, and GC futures are super liquid, like super liquid. Could have like $10 million. Like I don't have $10 million. Like if I had $10 million, I believe I could still trade this strategy. That's what I'm trying to say. Of course, there will be a limitation of 10 million, but what I'm trying to say is like the liquidity on gold for us retail traders is basically infinite, right? It's infinite. Are you planning to do some HFT strategy on Hyperliquid? It'll be very interesting. Well, HFT, like high frequency trading, I don't consider where I do high frequency trading because it's too slow, right? My strategies, they execute within like 100 milliseconds, let's say, or even 200 milliseconds. Sometimes depends on, like, first of all, you need fast data feed, right? If the data feed is stale, what it means is that your quote is also stale. So latency of data feed is one thing, and then the latency of the order. So in total, I think the latency is like 200 or 250 milliseconds in total. And for HFT, we are like in the millisecond, in the millisecond realm. And I think I will never trade in that type of environment because for me, that requires a very, very fast and expensive setup, which I've never built or never done. So as long as my strategies work within this, like, I don't know, 200 to 300 millisecond scope, I think that's more than good enough. Okay, guys, I'm going to answer a few more questions and then I'm going to have a toilet break and then we can continue. Like today, I see that, again, disclaimer, is a demo, this is not live. The logic works, so we're selling here, we're buying here. The total P&L looks pretty good on demo. So, you know, once I'm done with the toilet break, we'll try to run it on the server and then tomorrow I'll prepare the 10K US dollar account, right? So we're going to test like with 5 or 10K or like 5K each on a small account, and tomorrow I will observe the profits. Hopefully we'll make some money. Do you share any strategies on GitHub? If not, it's no big issue because the live stream is also helpful. Yes, I share my strategies on my website, not on GitHub, but you can download my strategies from my website basically. So if you go to Hyperliquid, for example, and want to try my Hyperliquid strategy, there's a setup guide, and here there is like a download link where you can then download my project and the code. So you basically, you know, set up like, okay, install Python, and then so this is like the project. So you set Python, download project, and you run the control panel dashboard where you can try the strategies. The GC side exercise market making or funding rate ARP. It's just a futures against spot ARP. So we are sort of like doing scalping the intraday spread. So it's a where is it? Right. So here you can see that we are trying to buy here, sell here, and like because it's intraday, there's like no funding rate. So it is like an actual like a very short-term strategy. So yeah, so the asking what capital would deploy for this? Yeah, so for initial testing phase, $5 or $10K, and if it performs well, I will add more. If it loses money, I'm just going to stop it, right? What is the annual return on investment on the gold strategy? So right now on this strategy, I don't know yet, right? We are still like testing, and I can't say for sure. But I'm again aiming for at least 20-30%. But hopefully it will be more. How do you know the liquidity of an asset at time? Well, if you look at the GC futures, right, you have like daily volumes, which is the amount of trades that have happened. And you also have the open interest, which means how many people are holding the trade. Anyways, guys, I actually need a very fast toilet break, so be right back. All right, guys. So thanks for waiting. I was actually holding for so long because today there were so many questions, but it's fine. Haven't had so much traffic in a long time. So, so let's repeat, or like, yeah, I had to go. So, how do you know the liquidity of an asset at the time? So, what you just check is like if you go to Interactive Brokers and look, for example, at like, for example, GC December futures, right? Here I didn't have it. I don't have it enabled, but you can look at data, which is called open interest. And what open interest shows is the amount of contracts that people are holding, for a specific day, right? So this means that currently there are 285 contracts that basically are inside an open position. And 285,000 is a lot because one contract on GC right now, GC futures is worth 4,250. So the GC futures are 100 of that. So 100 times 4,256. So one contract is worth like 425,000 US dollars. And because we have times 285,000, this is in USD amount how much people are holding in open interest. 121, is it billion? No. This number is so large, I don't know what it's called. Is it billion or trillion? Guys, I never use such large numbers. I don't know if it's a billion or trillion. It's billion, okay. Those zeros. Okay, so it's 121 billion USD in open interest, right? So that's how you know that it's very liquid. And the second thing that you can use when you look at the liquidity is actually just the volume, right? So here you can look at today's volume, and I'm going to show you the volume in USD amount. So here, today, I'm not sure if it's today or 24 hours. I think it's just today's session. It's 42 billion US dollars have been traded today, right? And that's just the December contract. Of course, we have like different contracts. We also have like GC for other months. So you can also trade gold futures for different, let's try September. Well, the September contract is 944 million, not that much, but it's still a lot, 944 million. And of course, you have like also MGC, right? So GC is a big contract. If you're a retail trader, you're more interested like in the MGC or 1 ounce futures because that one's 10 times smaller. And so if you trade like MGC instead, which is the micro gold futures, and look at December, they also have quite a lot of 6.95 billion, right? So that's also a lot of money and open interest. You deserve $10 million. I signed up for your course today and already implemented the Revel bot. Ah, thank you. And good luck with that. The Revel bot is like really cool. So I didn't know that the Revel bot would be that exciting for people because it doesn't make that much money. But let me show you, what this Revel bot does. I still need to make like a setup video for Revolut. But I think like just downloading starting script isn't actually that difficult. But let me just show you the Revolut exchange results. I just needed to confirm my Revolut. So the thing about Revolut is that it has zero maker fees, right? So you pay zero commission if you add liquidity to the order book. And so like I started this project maybe like 2 or 3 months ago. And so if you just look at the P&L, like for the past like 1 month, right? It's a very, very steady curve, right? But the profits are also like very small because we made $46 on the 10K account, which basically is our risk-free rate, right? So it's like 4.6%. It still overperforms like some savings accounts. So I think like it like slightly overperforms a savings account, but to me it is basically almost risk-free, right? Because you have no exposure. You just switch between USDC and USD. So that's what it's doing. How much money I need for you to come work for me? Do you work for a hedge fund or do you have your own private fund? Let me know. Uh, I was thinking, like, I'm always having it at the back of my head. Like, right now, I just prefer streaming and trading my own money and having the members. But I'm still thinking, like, if a company came to me and told me, hey, we have a few $1 million that you could manage and here's a cut, uh, I wonder, like, I would probably consider that offer. And so, like right now, life is like very, I would say, chill. Because 3 years ago, I worked for a corporate. It was very stressful, and I was so glad I left. Um, so right now, my life is like pretty stress-free, and I'm really enjoying it. And so I don't know, like I'm a bit hesitant coming back like to like this, big stressful trading industry and trying to, squeeze out maximum profits. Like trading like this is like super chill in my opinion. So maybe like I would just put together money with some friends, open a very small friendly hedge fund or something like that, but probably I wouldn't work for like a big bank or something like that. I think that would be too much for me. Wait, the hyperliquid versus MT5 strategy, what is the limit of money you can try this with? Well, I'm currently invested like $250,000, also including my personal accounts on hyperliquid. So that currently works. And I think it can also like work with more. But I think for most people, like most people don't have $100,000, right? So if you're below 100K, then definitely easy to set it up. So no limit for you there. And with what assets do you do it? SP5JP, what else? So right now it's SP500JP and USDJPY. Of course, other assets also work, right? I can always enable them if I feel like it. But these three strategies have been running like very well, so I just keep these three and just leave them running. I don't know the full limit. I think if I had to guess, there is no limit, right? Because I can always diversify or distribute the capital into different assets too. So if I had, let's say, like 1 million, I would probably switch on more strategies, do more efficient capital allocation and stuff like that. So I think with more capital, it's just more about optimizing, where you put the money into, and also from a certain point, if I have enough capital. Right now, I'm trading like a medium frequency strategy where I still pay high fees in terms of maker. If I had $1 million, I would just trade more frequently and have like zero maker fees, right? Because once you reach $500 million in 14-day volume, you pay zero maker fees, and then I would design my strategies to be different, right? I would make an actual market making strategy where I can really like maximize, like utilize the fact that my maker fee is zero. So from a certain point, you switch a strategy from being medium frequency to high frequency, right? Because you can afford that, because your maker fees will be that low. Okay, let's go back. Could you explain the idea behind the strategy and how it works? I know you said it a couple of times, but I still don't understand why it should work. Sorry. Do you mean the Hyperliquid or the Revolut or the gold futures that I'm trading right now? Banana Crypto, how much API approximately with your algo trading on Hyperliquid? Uh, well, maybe I should have like a moderator or a chatbot who can answer that question. On my 100K account, it's 6% over past 2 weeks. So 6%. I can't say what's the annual rate, right? Because it's been trading for 2 months, but I had 6%. So if it's times 6, it should be 36% on the large one, assuming the performance remains constant. And on this one, we made 2 months have passed. Let's just do 2 months. And so on this one, it's 1,700, and we can in percentages, 17% in 2 months. So 17 times 6 is 102%. I don't want to promise 100%, right? But right now I made 70% or 19%, like 70% in 2 months, right? So the 10K account is like really crazy as of this moment. And if you bought to test, no, nothing's for free. My membership is very, very expensive. It costs 34 US dollars per month. Right, 34. But it's going to get more expensive. Once I have more members, I will limit it a little bit in the future. Again, to protect a little bit of my edge. Which broker do you use to trade gold? Are you trading gold futures or CFDs? I'm looking for a broker with low fees, a low minimum deposit, and API access. I use interactive brokers, and I trade with CME. So through interactive brokers, I subscribe to CME, and I trade the GC futures there. And the commissions are pretty low. Like if you trade MGC or GC futures, their commission on gold is like very low. And for CFDs, I see trading, and they have like very good trading conditions on XUSD too. And like for my arbitrage, I arbitrage between CME futures and MT5 right now, which is like really nice. Okay. Whoops, I accidentally destroyed my app. So let's restart it. And yeah. Where's your bot server location? Right now it's located, well, depends. On Hyperliquid, ideally you want like Tokyo servers, but it's too expensive for me to buy a server in Tokyo, so I use it in Frankfurt, which is fine with me. And for when I trade gold futures, it's located in Chicago in the US because CME, right? Chicago Mercantile Exchange. I'm co-locating my server with the CME servers too, basically. So yeah, let's start the app again. So right now we see that this trading bot is 5 MGC futures short, and it is 0.5 XUSD long. The nice thing about this strategy is that it doesn't need a hedging account. Sorry, netting account. It can use a hedging account, so I can like separate trades here, and that is because the CME futures, they have like a minimum contract size, right? So if my maximum exposure is 5 MGCs, I will only have like 5 individual rows here, which is not too bad for me to manage. Like compared to Hyperliquid, where I have very small trades because we're sort of market making on Hyperliquid, we can have like hundreds of rows basically, and so that's why we need to use a netting account on Hyperliquid. How realistic is your demo trading? I would say not very realistic. Like I think it could work, but I don't trust the results here. Today I'm just testing the logic of the trading bot, but not the results. So the fills and the real market execution differs a lot because we have demo on interactive brokers and also demo MT5. And so tomorrow I think I'm ready to deploy the strategy live testing on a small account. So I already got the money ready. So tomorrow, hopefully on live stream, I will show you if I'm able to make some money tomorrow with this strategy. And I hope I will. I have high hopes that it's going to perform. If not, like we can try to apply some optimizations, and if it doesn't work, then it doesn't work. But obviously you see like the basis, right? If you bought the basis at 55.5 and exit at 60, it's definitely profit, and getting filled here and exiting here is clearly visible on the chart. So yeah, high hopes. I find new strategies. Sometimes when I go to bed, they just pop up in my head, and then I dream about it for 3 hours, and then go to the office, and then I test it, and then I knew I was right in bed.
I think, I already explained like the process. Like my strategy revolves around arbitraging, the same underlying asset. So, for example, gold again. Gold you can trade as a CFD, right? XUSD. You can trade it as a futures product. You can trade it as a perpetual futures, as tokenized PAXG, as an ETF like GLD ETF, and there are like also other ETFs on gold that you can trade. And just by comparing these 5 assets and their pricing, you will find that gold prices differ based on what you trade. And so we're just trying to capture these pricing discrepancies basically. And then for Bitcoin, let's ask ourselves the same question. Like if I want to arbitrage Bitcoin, how can I trade Bitcoin? Bitcoin CFD, look for a broker with the cheapest commission and spread, MBT futures on the CME, right? And then here I try to make like this order book aggregator, right, where I stream Bitcoin prices from all these major exchanges. So we take prices from all the Bitcoins from these exchanges, uh, and you can also add like a DEX like Hyperliquid. And again, like then you see that you can trade Bitcoin on these different exchanges and look for these pricing discrepancies, right? And people might argue it might not work, it might be too slow, but I think it can work if you look deep enough, right? Because most people they're like, oh, I tried to do it on Binance, but Binance is the largest crypto exchange with the most sophisticated market makers. So of course you're gonna have a tough time. But maybe focus on a crypto exchange with low liquidity, not so many clients, but still pricing discrepancies that you can find. Then maybe you'll have a higher chance with other exchanges. I think the biggest blocker to becoming like an arbitrage trader is to overcome the commission, right? And as a large market maker, you often get to do it for free or for a rebate. But ever since, I like pushed through this barrier, like was able to generate money in spite of commissions, the exchanges they actually came to me and, hey, I see that your volume's quite high. Would you be interested in our market maker rebate program, or would you be interested in like zero maker fees, but in exchange we want to have more liquidity, right? So if you actually perform well on exchange, you will actually establish a very good partnership with the exchange. So for example, Kraken came to me like at the start of this year and they offered me like a very good deal, but sadly I moved to Hyperliquid because the profits were better there. But still, Kraken is still, you know, on my list somewhere, and if I want to, come back there, I think I could perform quite well on the Kraken exchange and do like Bitcoin, PAXG market making and things like that. And I think that is like very possible to do. So the assumption that everything's efficient and that everything is like super sophisticated, yes, it applies to sophisticated exchanges, but some exchanges still show some discrepancies, and it's all about looking, right? So assuming that something doesn't work is an immediate blocker that you will not make money, right? Because you basically gave up before even starting to research that. And so if you want to try this type of strategy with any crypto exchange, before assuming that something doesn't work, just try it yourself and you'll see. The GCZ6 versus XUSD is market making funding rate ARP? None. It's just a normal, we're speculating on the, where is it? Spread here, right? So here, this is the basis. So when base low, we buy. When it's high, it sells. So funding rate means that we're making money in the funding rates or on swaps, which is not the case. Market making is also not the case because, I mean, yeah, we're like providing limit orders on one side when it's high or low, but it's basically just speculating on the spread here. So it's just sort of like a statistical arbitrage, right? That we're applying between futures and spot using Bollinger Bands as a mean reversion. I'm trying to create an arbitrage bot between OKX and Binance, but I'm not very confident it will profit. Do you have any suggestions? Just do it. If it's not going to be profitable, then you have at least learned to apply a system between two exchanges. And so if you look for other profit opportunities, then replace Binance with OKX. Oh, sorry, that's what you said, with Coinbase. Or replace Coinbase with Kraken. Or replace Kraken with a DEX like Hyperliquid. So I think my recommendation is that if you're starting out and you have a idea that it could be profitable, then you do it. Even if there's like 10% chance it's profitable, and 90% chance it will fail, you take that chance because you have nothing to lose. Like if during the first week or month you lose like $10 or $100, that's okay, right? At least you tried, you implemented the system, and best case scenario, it actually works. So I think being profitable is the goal, but if something's not profitable, it shouldn't deter you from not doing it, right? And so for me, a lot of my strategies were not profitable either in the beginning, right? But I did implement, a bot that arbitrage futures with CFDs. I did implement a crypto bot, that implemented Kraken against CFD, and then I implemented Hyperliquid and things like that. And in the beginning, most of the strategies I made were never profitable, but then with some optimization or replacing some exchanges, it suddenly worked. So all I had to do is like maybe replace an exchange, replace a symbol, or replace the logic, do some little tweaks. But I think the skill to actually create an arbitrage bot in exchange, to at least attempt to build it, you'll progress much further than compared to the people who actually just give up. On the main strategy with the 100K, what is your leverage? It's quite low actually. It's 1 to 5 on JP225, 1 to 10 on SP500, and 1 to 20 on USD/JPY, right? Depends on the volatility of the asset, how risky it is, how liquid it is. JP is not so liquid, that's why I use 1 to 5. SP is very, very liquid, so it's 1 to 10. And USD/JPY is a forex pair, so here I can afford to risk more on USD/JPY. Hey man, great resources. Do you have any resources on building bot to trade on Sexes or centralized exchanges? No, I don't. Like I built one strategy on Kraken, and so right now what I would do, like if you asked me to structure or build an arbitrage bot on centralized exchanges, right? It's not that difficult. Just need an API key, sign up, and then it's all about writing the correct prompt. I was thinking like maybe I should create like prompt templates like, hey Claude, I need to create an arbitrage ring bot, let's say between Binance and OKX, and I want you to, buy Bitcoin when it's $5 cheaper on Binance than on OKX and exit when they're like even, something like that, right? So I think it's like with AI, you'll be surprised how easy it is to build it, even though you have no prior experience. Just sitting down, and sitting down for 2 or 3 hours and like making sure that you get some type of product, I think is very good. All you need is just prepare your Binance account, the API keys, and just run some test trades. That's the only thing you need. Pro works well on paper until you have to carry the position overnight and get destroyed and carry commissions factored in. If you carry a position on the spot, you'll pay holding costs overnight. Yes, that's correct. Or you will make money on the spot, right? Because if you trade XUSD, the swap short is 37 points, right? So you'll make money if you hold a short position. So just to prove you wrong, or at least like not to assume that the swaps will kill me, if we open this app, right? So the annual rate, right? Where is the annual rate here? Oh, I don't have the annual rate displayed here. I need to open my other dashboard. So 1 second. You can also make money on that. So this is, yes, let's open this dashboard here. So here we have it's a legitimate like comment, right, or question, and like a lot of times actually the funding rates or the swaps 95 they will kill you because brokers they mark up the hell out of it. But sometimes they also work in your favor, and it's about knowing exactly what you're going to pay. right? So before you run this type of strategy, like you can try to design a strategy to exit the trade at the end of the day, so you avoid paying the fees. So here the annual rate is 3.7%, let's say, right? So basically we're just taking the current premium, which is $60, so that's the futures basis. We divide it by the days to expiry, multiplied by 365, and divided by the current market price. So by holding a short position on GCZ6, you're going to make like 3.68 or 3.7% annualized. But on FT5, you pay a short swap, right? So we go long, for example, we go long on the futures. So we're going to pay the futures premium, and we're gonna gain or make money on the short swap, which is going to make us money every day, right? When the swap short is positive and you have a short position of FT5, you're going to make money every day. So 0.37, right, times 365. So that's how much we're going to make in a year, and we divide it by the current market price, which is 4,188. Here, the short funding is 3.2%, right? So we're going to make 3.2% in funding on the short side. And so if you look at this value here, so we make this much, and so we will lose this much, 3.69. So we're going to pay, oh, sorry, 0.32 is 0.32 minus 0.37. So we're going to pay 0. That's like in percentages, almost nothing. With my zero, it's 0.032 minus 0.037, 0.5%. So we're going to lose 0.5% if we decide to hold it as a carry. And again, it is not a funding rate arbitrage, because again, we're scalping the spread intraday, right? The main objective of the strategy is not to hold the position for extended periods of time, but we want to like exit intraday, like you see here, right? So we're trying, this is the intraday chart, right? These are all the trades that happened today. So here we sold here and we went long here on the demo, right? Still needs to be tested, but this is what we see on the demo account here in terms of the fills. So with your backtest analysis, how do you procure the data? Do you use paid API or free? Well, so in this case, what you see here is I use DataBento as my data feed provider. So here, DataBento, so they provide an API key, and then with that API key, you can subscribe to historical or live market data. And I use them for futures right now, but you can also use them for options of futures, equities, and equity options. Right, so I use DataBento as my main data feed provider for futures, and I extract real-time CFD prices directly from MT5 here. So that's basically to answer my question. Okay, anyways, so I'm glad I answered all the questions, because now I can get back to work, but keep asking. It's always fun to talk about these things with you. So, with this arbitrage strategy, right? So the thing is, like the historical data, like here you see that this is the live market data, right? Here the spread is very tight, but the historical run is more scattered. And I want to see or understand why that is. So I'm going to discuss that with Claude here. I feel like the historical data bento causes a very scattered chart, but the real time market data, creates a tighter basis chart. Can you please investigate? Right, so because we're using that data to create signals, like to determine buy and sell levels for a strategy, I think it's important to understand why this data is so scattered, because here this is the live data, right? And this is the historical one. And we're using the historical one to compute the Bollinger band for our trading bot. I get what you're trying to do, obviously, but my point was that, okay, let you finish. It's fine, like being skeptical is good, right? A lot of times, like, such strategies can fail because you just forget to include certain things. But ideally, I would love to prove you wrong, because if I can prove you wrong, it means I'm gonna make money. And if you're right, then at least you're right. But then my strategy might lose. So probably tomorrow we'll have the live testing session, right? Where I'll deploy the live capital, and we're going to attempt to make actual money tomorrow. But if I $348, I mean, yeah, the demo results look too suspiciously good. That's a good point, right? I wouldn't trust the demo results, but I still think there's an edge in this strategy. Okay, the prompt is taking quite a lot of time, so hopefully that will be done soon. Let's see if we have some updates on our trading profits on Hyperliquid. $30 here, 23 here. Well, still $30, right? Or $50 in total, plus some other accounts. So probably for today I'm plus 100, I would assume, which is still good. No, they say $100 a day keeps poverty away. You're exposed to the term structure of USD as you receive floating overnight and pay fixed via your exposure cool project. Yes, that is correct. That is correct. I do understand your concern. I do understand it, and I think like we can all speculate whether it will work or not, right? The concerns are valid. So I think the best way to just proceed is I'm just gonna start trading. Hopefully, I'll make some money on live. Maybe I can then build some track record on this new project, right? And then we will see, like in a few weeks, how this strategy performs, and we're gonna find out. So that's like part of strategy testing. Like most strategies you develop are likely to fail, right? Like when we design strategies, a lot of things that we test will fail in the live training environment, and then we have to like cry a bit, and then you move on, you design your strategy, and maybe you'll find something new that works. So this is like all part of a process when you try to make things. And I have scraped so many projects in my life. I think I have like already 100 Git projects in total, out of which like 80 or 90 are dead because I just decided not to do it anymore. The same way like I ditched Gravity, right? So I think Gravity had potential. Like I think I could make money, but Dom came to my live stream and he told me the liquidity is too low. You shouldn't go there. And I ignored him. I said, I want to try anyways. And like he was right. There was no liquidity. And so I couldn't make much money on the Gravity exchange, which is a decentralized exchange, by the way. And like he was right. And I was wrong. But I had to learn the hard way, right? Just by doing it. So there are advantages to doing it your way. And the advantage is that you have a chance to explore or find new things that other people haven't found yet, for example, right? But if 9 out of 10 people tell you not to do it, then they might also be right. But yeah, this is like part of my personality. I like to go against the current sometimes. Like I don't trust anyone. If I trust them, but I want to verify it myself, if that makes sense, right? So I would always rather like learn the thing by seeing it for myself. That's how I do things basically. Anyway, enough from me. Enjoy yourself and great to see you sharing your work. Thank you. And thank you for sharing. Uh, what's the minimum capital you'll need for this project to hedge and for Hyperliquid? Well, Hyperliquid is a bit cheaper. I think you can start with $200 on Hyperliquid. so Hyperliquid is going to be a little bit easier. On futures, it's a bit more difficult because the margin requirement on interactive brokers is a little bit high. All right, let me show you the interactive brokers margin requirements. And so if we look at the GC futures, right? If we look at GC futures, like the large contract, it costs $38,000 to open a GC contract. But it costs $3,700 to open the MGC contract, right? So let's say you will need like $10,000 to run the MGC strategy. But what we can also try doing is like I can try the 1 ounce futures. But 1 ounce futures can get a little bit expensive, right? But I think it can still sort of work. So here the 1 ounce futures, they cost $378. So maybe $1,000 would be the minimum requirement to run the strategy. But again, 1 ounce futures have higher commissions, so you will probably need to sacrifice a lot of the edge to pay in commission. So I think it will become like very good from like trading MGC. And last year I traded like the big GC contracts, right? Because last year like the GC provides the most exposure for least amount of commission, right? Yeah, my strategy graveyard is full too. But the thing about the graveyards is that sometimes when you revisit them in the future, after learning so many things, like as a trader and as a researcher, you learn a lot of new things. And I think the reason I'm coming back to GC arbitrage, even though I traded it last year, is that I learned so many things on Hyperliquid and that I'm gonna apply some of the strategy, like some of the concepts also in my future trading strategy. Because last year what I did is I just computed the Bollinger Band and I went long and short regardless of where the basis was, right? But now that I'm able to compute the implied annual rate, basically I know if the basis is high or low relative to the, let's say, CFD swaps or relative to the lending rate of gold, which usually is around 4 or 5%. I now also can create directional bias, and that's what I'm going to add in this strategy, right? I think that's what was missing to make my strategy more consistent. Because last year I had like 3 months profits almost every single day, and then I had like one very big loss because I was not able to withstand a big spike in the basis due to Trump tariffs. But I should have held on. But I was too scared because I didn't understand fundamentally what the basis means from the fundamental perspective. I just looked at it technically in numbers as a Bollinger Band, but not what it means like in the real world, you know. If you understand what I mean, right? You wouldn't buy a loaf of bread for $20, right? Here where I live, a loaf of bread costs, I don't know, $2, $3, $4. And so if a loaf costs $10, then it means that maybe wheat is getting expensive, right? So why is bread expensive? And the same way when basis jumps from 56 to let's say 80, right? The jump in basis 30. It must mean something, and I didn't understand what that was at that time. Use AI to filter and fix your orders. I mean, that's what I'm currently doing. Or like, what do you mean exactly by fixing? So right now, yeah, so also one reason I'm going back to gold futures is that last year I coded the strategy myself, right, manually. So I think a lot of the coding and optimizations can also be done with AI. So I'm also like trying to replicate my same strategy, but with the help of AI, hoping that I can, achieve better results, right, by adding like extra inputs or extra logic. On the new MDFI strategy, what is the exit criteria? Is it fixed take profit or something else? It is a Bollinger Band, right? So here I can actually display the Bollinger Band here. So what this strategy tries to do, like you can see the things here, right? So the Bollinger Band here, it tries to sell when the basis goes above the band and it exits at the average here. Can you see that? And then again, it sells when it's above the band, and then it will try to exit again at the average when it drops here. So that's the main idea of the strategy. And when it goes below, it will buy, right? So it's just a mean reversion strategy using Bollingers. How much in a week? Are you a developer? I used to be a developer. Now I'm a full-time prompter with Claude. And so what is my current weekly P&L? I mean, it's like in my license overlay. This week I'm plus 576 USD, but we can also like try to double check it here in our server. So here we have our live dashboard. So how much did I make this week? So we made $380 on Monday, 160 on Tuesday, and today $30 on Wednesday. So yeah, it like $500 per past 3 days, including today. You got check widgets on your Windows. You there? You live there? Yes, I live in Prague. Varování před 32 degrees in Prague. Very hot. It's very hot here. Hello, friend. I'm also Vietnamese, but I currently live in Hanoi. Yeah, welcome. So we're very far away from each other, but we're both Vietnamese, so that's kind of my Vietnamese not so good though. I used to speak better as a child, but now living here for such a long time, I don't have that many Vietnamese friends either. So all I can do is order some food in a Vietnamese restaurant and say hello, thank you, bye. I'm based in Prague too. Great, cool. Cool that I have also viewers from Prague. I should visit some Prague quant meetup or something. I think there are like a lot of like events that I don't attend, and it would be nice to make some new friends because I say it a lot of time. Trading is like a very lonely job, especially if you trade alone, right? You trade alone, you don't see anyone, and the problem is talk. I hate talking about trading outside my friends. For example, my wife is at the dinner table. The last thing I want to talk about is charts, and things like that. It's not like a good. Uh, talking about trading is not good for social interactions in public, if that makes sense. Especially if girls are at the table, you would rather talk about how was your weekend, and where were you last week on your trip and stuff like that, rather than I entered long on Bitcoin and I'm down like 4%, and like, yeah, where's your stop loss? It, it it doesn't fit in like a social environment, I feel like. How old are you? I'm 29. Okay, so here we have this issue with the charts here. So Data Bento's BB1 stamps each record at the time of its interval. The record index carries. Okay. There's no more forward fill. So can you delete the this is history cache so I can upload, we can request new data from Data Bento. You just have to tell them you made $300 last week and watch what happens. Do you speak Vietnamese well? No, not really. I'm very sorry. So flexing money in public is not my biggest strength, to be honest. Because, I drive a Toyota Corolla and I wear Zara t-shirts. So I'm not really good with the flexing part. I mean, other YouTube influencers are pretty good at it, right? With all those Lambos and stuff like that. But how would I say? I don't like the attention from wearing expensive things. It just feels weird. Yeah, the most expensive thing on my table is just my phone. It's a Samsung S23. I bought it in Dubai because I broke my phone during a holiday trip, so I had to buy a new one. And they said it was like tax free, so I decided to buy it at the airport. Okay, I think I can restart my app now, and so now this basis chart should be fixed. Now I have to ask a question. Does the Bollinger bot also work with the new basis data? Okay, so here we're using the align thingy, deleted. It holds the whole session memory. Writing that file every 6 seconds on each part refresh, so the file will reappear within a minute. Okay, so we refresh that in 1 minute. I don't know, it still looks scattered a bit. Like this looks good, right? This is like, in my opinion, correct. This thing, but this is too scattered still. You can tell them about the money, but they don't want to know about the how. Yeah. How to make money is usually, flexing money is easier than making money, of course. How expensive your PC setup? I bought it for a friend. I have 32 gigabytes of RAM. I don't know how many cores, whatever, but it cost me like 1,500 euro, something like that. So not very, not like too expensive. Not to mention you don't want to be around people that only care about the clothes you wear and car you drive. That's correct. You can like at least be like, at least I have a car, right? So I can give you a ride home. So it doesn't matter which car you have. Can you give me some insights of how to find a good team? We are a 3-man show. My advice to finding a good team is asking yourself the question, are you able to manage the things yourself? Because a lot of times you'll be surprised that less people actually can generate a lot more value than a large team. Like if I look at Hyperliquid, right? Hyperliquid, I don't know how many people work for Hyperliquid. Number of employees on Hyperliquid. They start recording of 11 to 12 employees, right? And so right now they're like below 15 people, which is crazy. So I think when starting a team, you should actually ask the question, am I able to manage it like alone with someone else, or what things do I need to make this business work? And me personally, I prefer working alone because all of the things that you see I can do myself. Like I can code my apps, dashboards, string bots, research. I can also make my own website and things like that, right? So it's like actually knowing what exactly that team needs and if you're actually able to do it yourself. And in my case, I prefer working alone actually, which is the most like comfortable option for me. Often do you visit Vietnam? Last time I was there like 3 years ago. As a child, I like flew every summer, and now like not very often. But I think I'll come next year for a visit. I still have my family there, so each other might see each other there. Okay, go ahead and apply the fix. Can you add a scatter plot below in dashboard showing the big data and BBO data so I can investigate further? So what I'm going to do is like I want to also look at the historical data, not the basis, but the individual prices, and see if see if I can find the reason why it's so scattered. Because that's the last step before I can like actually deploy it on live tomorrow. Because I need correct data to compute my entry and exit levels. Oh, actually, the implied annual rate is here. I didn't see it. What is the goal? The goal is to build an arbitrage bot between gold futures, traded on track brokers, and MT5. And on this chart here, you see the price difference between the futures and gold pricing. And so when the basis or difference is high, we sell futures and we buy gold on MT5. And then we try to exit at this mean. And I hope that, yeah, this will make a profit. So the goal is to make a profit. Right, I'll have my first coffee of the day in a second because I'm crashing quite a bit. But yeah, so tomorrow live trading, I think it will be like very, very exciting. So we can start like with like 5K and 5K, and like I don't assume that it's going to be profitable the first day. Like we still need to test the executions. I'm still going to like sort of test on the live account, but I'm going also with the intent that hopefully I'll be able to close some trades and profit at the same time. So we'll see how it goes tomorrow. Average entry 4196. Is it a good idea to use two strategies like Bollinger Band plus RSI, or better focus on one strategy? I can't say, right? It always depends on the strategy or the market. Uh, Personally, I don't have much experience with RSI. Like I've done some simple RSI bots, but because I'm like focused mainly on mean reversion trading and I like to keep strategies very simple, I just stick to Bollinger Band. So if you ask me what strategy to use for mean reversion, I would just tell Bollinger Bands. And so for RSI, I didn't like create any strategy yet. Not sure if you know, but when you actually go live with IB TWS, you can have IB support move your account infrastructure to different locations. I had mine moved to Switzerland because their servers. Right. I assume like maybe that's that's a wrong thing assuming, right? But I assume that based on my location, it already automatically directs me to the closest like server. So for example, if my server is in the US, I would be like connected to like some US TWS server, something like that. And if that's not the case, then I definitely need to contact interactive brokers because that's actually very important to me to have that. Because ideally, I want to be placed close to Chicago because that's where the CME exchange is located, and there I would also have the lowest latency. If you come up with the idea for a killer strategy that makes millions, would you share it publicly on YouTube or social media? Depends how much. If we're talking about a strategy that makes 20-30% per year, I would probably share it. If it makes like, I don't know, more than 100%, I would probably, yeah, think about it. But there's a chance I would publish it, right? Again, my mathematics tells me that selling strategies is more profitable than making money in trading, even though I might be a profitable trader. So I'm still going with the assumption that selling the strategy will still make a lot of money. Because let's say I make a very nice strategy, all my members download, the code, they make money for 1 year, and then one day it stops working and like, hey, can you give us something more, right? So I think you'll also establish like this dependency for like long-term cooperation, which I think is also a good thing. Prediction markets are better than trading. Can't argue with that. I'm not shitting on you, but I don't see the point of using technical analysis. All of these have signals have backlisted a million times. and don't generate alpha. Well, I don't know, like, I'm not offended or anything, right? I'm just confused. What makes you believe that, right? Because obviously I'm sharing my track record with very consistent returns. Of course, just 2 months, right? So maybe you can't trust me that well, but telling that there is no edge and having a P&L curve like this either means I'm lucky and you're right, or there's an actual edge and you're wrong. It can't be both, right? So, and like with that type of argument, like what's the point of backtesting, right? If something's backed a million times and doesn't work, why do people backtest in the first place? Why do people trade, right? Because if you already come to the stream and say, oh, it doesn't work, then you automatically fold it, all your chances to become profitable in the first place. So why even bother trading, right? So I think even if it doesn't work, and you might be right, we're still going to keep researching, keep looking for strategies until we find something that's profitable, because that's what trading is about. It's about looking for these strategies and making money. And the argument that something doesn't work because it's been backtested a million times, then you just have to be better than the other person, right? That's why trading is a game where only the best succeed. So out of those million backtests, maybe a few have succeeded and became rich. That's the dream that's being sold when you start trading. So yeah. So yeah, I'm not angry or anything. It's more like I'm confused, like by that comment that just because something has been done a million times doesn't mean that I can be the 1 millionth and first person to try again, right? Do you close all positions before the end of session? On Hyperliquid, no. On this new strategy on futures, I used to close it every day because I didn't have any risk monitoring at that time overnight. But I'm considering to also run the strategy like overnight, right? So assuming that the swap rate or the funding rate MT5 doesn't kill the edge, I will also run this strategy 24/5. But I will definitely close it like before weekend, I believe. Do you have program experience? Yes, I do. I used to code. I used to design analytical dashboards, right? Data reports, risk management apps, and then I translate that into trading later. But now with AI, I don't code anymore. What strategy are you using on Hyperliquid? It's a funding rate arbitrage between two assets. So here, for example, you can trade S&P 500 on Hyperliquid. You can trade S&P 500 on MT5. And so here I'm just measuring these small pricing discrepancies, right? So when the spread is low, I buy. That means Hyperliquid is cheaper than on MT5. And then when it reverts back, I sell. That's the entire point of a strategy. And always opening two trades at the same time, one on Hyperliquid, the other one MT5 to hedge, and then exiting both position, hopefully for net profit, right? So that's the entire idea of the strategy. And strategies has a very sharp ratio and actually coming up with one. Also true. Selling a strategy has zero drawdown. The only drawdown is the time invested into making the course. Or if you overpromise too much, you might get sued by your people and you'll also pay some lawsuit fees, but hopefully that's not the case for me. I have a question. How many filters does an edge need to run through to be considered an actual profitable edge for retail analytical trader? I don't know. I just know that if you understand why an edge is an edge and why something was made, because I'm not the type of trader to take directional bets, right? For me, I'm very lucky that I don't have a winning day, then a losing day, then a winning, losing day, right? So maybe you need like a large sample size over the course of weeks to months to actually determine that you're profitable. the thing is, I'm an arbitrage trader, right? So for me, whenever I make a profit in an arbitrage, I know I made the correct decision, right? So you can already say, like with one trade, that you did something correct. And so you have like this direct feedback that whenever you make money arbitrage, you did something correct, and whenever you lose money on an arbitrage, you know that you did something wrong. So every time you lose money, you know you have to fix something, right? Or maybe you got slipped and then you can ignore it and like try it another time. So compared to classical trading where you have wins, losses, and so on, here I can exactly say, like with a few trades, that okay, this works because I know what my edge is and I know they made money. End of story. So within a day or week, I know that this type of trading is going to make money, and I know that I can actually maximize that edge because I know that what I did was right. And so in trading, because it's more like statistical outcomes, you have 60 winners, 40 losses. You just need more sample size, but I'm not a professional, so that's why I say I don't know, because I don't deal with these type of things like other traders do. There's a guy who turned $5 to 10 million. I doubt. I don't know any guy who turned $5 into 10 million. But maybe you're right. But if I had to bet, I wouldn't trust it. Is there still inefficiencies on spread betting shops which cause synthetic prices, or is that gone today? I think like spread betting shops are like basically OTC markets, right? Or OTC brokers, and they create like synthetic price based on like some real underlying asset. And so I believe there are inefficiencies, but these type of brokers or spread betting shops, basically they have very high markups, very high funding rates, so they already make it difficult for the trader to actually make something, right? So I prefer the exchange traded products like CME, like crypto, basically anything you can trade on an exchange without having a middleman or an OTC product. And the only reason I'm using MT5 is that I know that the intraday spread is very low. So I'm using the CFD market to my advantage because I know that they're the cheapest products you can trade to trade spot for very cheap. Like if you trade it on margin, uh, that would be like, I think, much more expensive, right? Than a contract for difference. Um, order some coffee and let's continue. Or I have to write down the crypto order book aggregator. I'm going to share it with you later today. I think that's a cool project to share. Like, yeah, Claude is still working, so we have to wait. But yeah, but it's like nothing too bad, right? Because for me, like these spikes, they affect the standard deviation, but the average price should like remain the same. But you see that the differences are quite big, right? So here we have like 59.5 and the high spike is 60.5. So like we need to do something about that. Maybe instead of 1 second snapshots, we can use like 1 minute trades. I have looked, like there are a lot of ways to do it, I think. I ask every new trader I come across, do you think there is a strategy that gets you green every day? Everyone says no, and it would be a scam. So now I'll ask you. There is a strategy that gets you green every day. Let me show you. It's my Revolut market making strategy, right? Not a single loss because we are market making USDC against USD. We always buy USD at 0.9999 and sell USDC for 1.0001. Just one example, and I proved you wrong. Okay, need to work too. But subscribe to your channel. Great work, by the way. Good job. Wish you the best. Thank you for joining. It was nice to have you on stream. Hello, brother. Do you know OmniRoute? No, I don't. What is OmniRoute? Yeah, by the way, the unrealized P&L might not be accurate because indirectly brokers' data might be delayed. Ah, thank you very much, sir. It's nice to have colleagues that make you coffee at work. Okay, actually, I should finish my Coke and then the coffee. Actually, coffee and Coke works really well together. Wow. Guys, I'm shocked. Like, if you mix coffee and Coca-Cola, that tastes actually pretty good. Well, I'm gonna try it home later. Well, you're a very sharp guy. Thank you. You have unlimited tokens in Claude Code? Um, I've never reached my limit, so I would say they're unlimited, but that's because I don't use it enough. Yeah, I have the, like, let me show you the settings. Like, we go to usage. Like, I don't know, I never reached the limit. My friend sent me, if you don't max out your Claude tokens by noon, you wasted your morning. And maybe he's right. But sometimes I like to sleep till noon, so don't have mornings anyway, so it doesn't really matter. Coke and coffee. Drinking those right now. Cool. I use the Coke as a palate cleanser. I think it has like a, if you buy, it has like a toffee caramelly flavor, right? If you buy toffee, if you know what that is. Like if you mix coffee with Coke, it gives you like this caramel, but still bitter taste, like dark chocolate with caramel. Yeah, I guess that's what it is. Tastes like dark chocolate with caramel if you combine those together. Your Rebel strategy is invested 10k to run. Yes, I put 10k on that account. 10k something. Okay, we're done here. Okay, so let's restart the dashboard. And I think we just found an exit while. Nice. So we exited our position by restarting my dashboard. So what do we trade here? We trade right now. What you see here is the basis between GC futures and wow, there's a big spike down. So GC futures trade on interactive brokers. So these are gold futures and arbitrage between MT5 CFDs, XUSD. And so we're measuring the price difference here, right? And so when the price difference is high here, we're selling futures, buying spot, and then when it's at the average here, we're exiting our position at a better price. And here we exited our position, we see some spike, and here our realized P&L increased to 515 today. And now we're selling again. But again, it's demo, right? Again, disclaimer: this is demo. We'll see the results on a live account once it's ready and done. So our new dashboard should be running now. Let's see if it works. So what I want to do is I want to add extra chart in basis dashboard to look at the BBO data. I tried to run the dashboard, but I cannot see any changes. Can you check? It's not capital efficient though, putting 10K into that. It depends on the return that you're happy with. So right now, the average return on the strategy is like 5 or 6%, which is still fine, like a savings account. And like I use that account also as like an extra buffer, right? For company expenses, or if I'm running low on margin, hyperliquid. So I can always use that account to quickly withdraw the money and then use it for something, when I need that money. So when I trade, not all of my money is invested, right? I have some reserve funds to maybe deposit extra margin in case I need something. And part of that, I consider Revolut sort of like a savings account with the ability to quickly move money when I need it to. So these are CFDs on the spot market, not in the futures market. Well, I'm trading futures on interbank brokers, and I'm hedging that with the CFD market MT5. I mean, it's no perfect arbitrage, you're right, because when you trade something like that, there is a chance that you're going to lose money, right? Uh, for example, if your mean or the average moves against you, you will lose money. But but it should work, in my opinion. So, and the question is, do you close when the spread go bigger and bigger? Actually, no. So if it goes against me, I'm actually more inclined to like add into the position because we enter at a good price. And worst case scenario, it goes like, I don't know, 10, 20, 30 points up. And then I'll be like in very, very huge loss, right? But the thing is, as it goes against me, I get better price, right? Because again, the rule of futures arbitrage at the end of the day is that the futures will converge to the spot price at the expiry date, right? So we are like sort of playing a game based on these rules. So even if it goes like minus 50 or 100, eventually at expiry date, it should return back to zero. I can show you this convergence to zero in this other app. Like I always switch between apps, but here I have this dashboard app that I'm going to run. So if we look, like we can like look at MBT futures, for example, right? MBT futures are also fine. Yeah, I think to loser at this point makes sense if you are in problem double. Yeah, it sounds like quite counterintuitive because in trading they always teach you don't like double down your position. Like if you're in a stop loss, don't use martingale. But actually, if you look at the like fundamentally at the price, like entering at a cheaper price is actually much better, right? In this type of arbitrage. So what's important to do here is you have to manage your leverage accordingly, right? You have to keep leverage low so you can like reinforce, maybe have some extra funds, maybe diversify in different strategies. And so when one strategy goes into negative a lot, you can close out other strategies, invest into the one that has the good price. And so this is also going to be a big part of trading strategy, right? Having multiple levels to enter. And so risk management is also crucial in this type of trading. Because on Hyperliquid, we just enter at one flat level, right? And even on Hyperliquid, we could do that. So here what you see is that here we have Bitcoin futures against Bitcoin spot. We're again taking prices from the CFD market. And you see like how over time, like it doesn't look that nice because, it seems like we still need to work on the data quality. But we see that this premium on Bitcoin, which is a difference between Bitcoin futures and CFD, is decreasing over time. And again, our assumption is that at expiry date, this premium should be zero. So that's what we're what we basically hope for, right? And we can consider it as like a law in trading, right? So, and because we know it should go back to zero, even if the premium goes up to 1,000, selling at 1,000 here would be like a very good price. So we sell at 1,000, we buy the CFD, and then eventually it will drop to zero. So we actually get a better price in case it goes against us. Okay, let's run this dashboard again. Yeah, not many profits today, just $50. But every hour we like make a little bit of money, which is like nice, right? So making a little bit of money is always $50 is better than nothing still, right? And like the funny part is like $50 per day on a 100K account is still quite a lot. Like think about it, if you make $50 during 220 like working days in a year, that's $11,000, right? So you make like 11% annualized, even if you make just $50 per day. So I am, one thing about trading is like it's also important to be grateful for what you get. $50 per day is a lot, right? Even $100 per day is a lot for many people. And I think the chase to make 100% returns like every year or more is actually kind of unrealistic, right? So also like managing your expectations is, I think that's a blocker. Like when I tell people, hey, I have a strategy, it makes 20% per year, and they're like, no man, that's not enough. I can just put it all in Bitcoin. Bitcoin makes 50% per year, right? And I can become much richer, right? So you see how the greed also kind of works against building wealth, right? Because if everyone was happy with 20 to 30% per year, people wouldn't gamble so much on Bitcoin, right? They would just focus on more like consistent strategies. So I actually sort of feel that it's very difficult to accept like a 20% return for many people, especially if they trade for a very long time, because they assume that they can make much more, and then by the end of the year they're breaking or losing, but that's mainly because of their unhappiness that they can't make more than 20%. Nice stream, man. Love it. Yeah, thank you for the comment. Appreciating that. Like, guys, how many of you like are happy with like a strategy that makes, I don't know, 15 to 20% per year, right? Because when I was like 20 years old, and I was like quite a poor student, right? I told myself if I had like $100,000 saved up somehow, right? $100,000 saved up, and I would make 10% per year, right? People say you can invest in S&P and stuff like that, but that's fine. As a teenager or like as a student, I'd be so happy making 10K per year, right? Because my rent was like 700, then I can keep 300 for expenses, and I'd be super happy with that. And I told myself I can retire with 100K because if I made 10% on 100K, I could do whatever I want. I could play games, I could just stay at home, not go to school, not have to work. And like I was like humble at that time, right? And like that for me is like good enough. And like if I make 20%, that's 20K per year, and that's super amazing. So like chasing high profits sort of like makes you ignore that you have all the solutions or all the nice things you need like right in front of you, right? So a lot of things that are actually beneficial to you in trading or in life are like right in front of you, but because we as humans have like these super high expectations that we deserve more or that we want more, we actually ignore the good things and actually do the things that are pretty bad for us, right? Because if you chase 100% return, then you're going to gamble more, you're going to over leverage, you're going to, do the things that are actually bad for you. So yeah, that's the thing. So if someone comes to my live stream and tells me a guy turned $5 into 10 million, I actually feel a bit sad when someone writes something like that, because it gives people the hope and expectation that turning $5 and 10 million is actually possible, which is complete lie and bullshit. Actually, this is actually just a unicorn story. Hello, been a few weeks since I last joined stream. Can you give an update? Also posted you would make sure for VID soon. Yeah. So the update is that Hyperliquid has been going pretty well. We've been making very consistent profits. Report, right? And so like we're like up 6,000 over the past 2 weeks on this 100K account. And so like I haven't made any major changes on Hyperliquid. So instead I moved to now doing this futures arbitrage, right? So we're now trading on interactive brokers, and we're focusing now on the the GC futures and trying to arbitrage them with MT5 XUSD CFDs. And so right now we're like testing our strategy on a demo account. And tomorrow I'm hoping to deploy the strategy live to see if we can make any like live profits tomorrow. And so to answer a question with a short form vid soon, I was actually trying to do short form vids, but I felt like this, as a content creator, like this, I don't know, like creativity block, right? Or how would I say it? I don't know what to talk about in a short form vid because everything I send live stream is basically set on live stream. Every update I do, like I could like do weekly updates, what's been happening, but if you guys understand, like I don't want to make videos like, hi guys, today I made $390 on Hyperliquid. It was a nice week. And then next week, hi guys, I made $1,000 this week on Hyperliquid. I trade S&P, JP. And then hi guys, I trade. You get what I mean? Like I feel like there is no added value into just saying how much money I make, because at the end of the day, everything is already like sort of described in my like tutorial videos, right? If you go to train strategies and you watch my video on hyperliquid arbitrage, here you have, my public track record where you can like look at my profits. So I don't even have to make these updates myself, right? You can just go to his website and see how much money I make. And here you have like this 30-minute video where you like see what the strategy is about. So it's very difficult for me like I hate doing repetitive content, if you understand what I mean, because just flexing profits is not like for me good enough to publish a video. And so I was thinking like maybe like a stream highlight, like where I would just maybe take clips from the live stream, show the important parts, right? How my day progresses and so on. And I think maybe like a stream highlight put into like a short form video would be better rather than watching a 3-hour live stream, right? Because again, I understand that a lot of you people uh, don't have 3 hours, 4 hours per day to watch my live stream every day. And so yeah, I promised the short form, but the reason why I'm a bit hesitant now is I reach like this uh, content creator block, and I don't know like what to talk about uh, in the short form videos, if that makes sense. Because trading, what I'm doing is like nothing new. The same way I trade Hyperliquid 2 months ago is the same way I trade Hyperliquid now. And this future strategy, like, well, for the future strategy, I'm going to make like a video to explain exactly how that works. But sort of, it there is not much difference compared to Hyperliquid and futures, right? We're just again comparing two prices, and maybe the stream highlights might be like the best move, right? To show you important clips throughout the day. Uh, and that might be interesting. So before doing green strat in Revolut, do you have problem fees? No, in Revolut, the fee is 0, right? So on Revolut, if you add an order to the order book, it's 0. Oh, nice. So here I have the data that I can now compare. So here, these are the mid prices between data band 25. Oh, nice. Now we have a smooth curve. Beautiful. I don't know if you know, but you can trade also with IB, the spot market. Yes, I know. You can trade XUSD or GLD, but it's more expensive. So it's purely, so you can trade it like as a physical commodity, and you can trade it as a CFD. But the spread and the commission is more expensive. That's why I still prefer IC trading. And yes, the disadvantage is that you have to split your margin across 2 different accounts and your risk liquidation on one side, and your positions are not always hedged. But I can tell you that the difference in cost is humongous, right? I think compared to interactive brokers, XUSD is like 5 times cheaper on IC trading, and that's the only reason I do it. Hello, mate. Quant and trader here from Italy. Loving your stream. Subscribe. Thank you. Thank you for joining, and glad that you like it. I'm not a quant myself, right? So I always say upfront, I'm not a quant because I don't have the mathematical background, but I can say I'm a trader because I love trading, and I love watching quant content. So like I sort of try to, learn the things, but I'm not a quant. I would never pass an interview at a quant trading company. I'm new here. Is this TradingView MCP result or is this something different? I'm fairly seasoned in the space, but I haven't honed in on this particular setup yet. What is TradingView MCP result? I don't quite get it, but this is like a very simple statistical arbitrage between futures, gold futures, trade interactive brokers on the CME exchange, and just XUSD CFD, right? So this is just a very simple arbitrage trading. Yeah, stream highlights would be great. Cool. So, then you don't have to listen to me talking all the time. Maybe I can, take some interesting topics. But you know what? Let me just try to do something like, okay, I have 15 minutes of like 50, or let's say 20. Let's do 15. I have 15 minutes and I'm supposed to extract the most important parts of the stream into a 15-minute whatever it is. And I think maybe I'll learn something on the way also in regards to editing, right? Like my marketing skills are not very good. If you look at my thumbnails, they look like they were made in Microsoft Paint. Some of the thumbnails are good because my wife made them, but most of the thumbnails I do myself. So uh, I wouldn't say I'm like that good at Photoshop and marketing, to be honest. Do you think we could do arbitrage without using bot yet? I mean, you can try it manually. Like in theory, you can like buy on TWS, sell MT5, do it manually, and monitor that. So it's also possible to do it without the bot. How is the basis so high at 6 plus today? Yeah, it is high. Like you see, like yesterday it was at 56, right? And then within a few hours, it jumped like almost like it actually jumped to 61. So even though like if you bought at like 56, right? And sold at 60, that's $4 difference. On the entire GC contract, that's $400 profit, right? On a hedge position. So it's great that you actually like pay attention because this is actually incredible, right? Like you could in theory make money on this move because you pay like I don't know 20 cents in spread and commissions. On MT5 you pay maybe $2 on intermediary broker side, and so the rest is just the net profit, right? ATJ, morning from Brazil. Your content is really great. Keep it up. Thank you very much. Today I have like so many viewers. I know why that is. Maybe it's luck. The YouTube algorithm sometimes just, yeah, gives me lots of people. Let's just be grateful. Today's a good day. You should use the ratio, not basis. Ratio price one by price two, rather than price one minus price two. Because that way you can see the percentage differential and keep the hedges perfectly hedged rather than arithmetically. Let me think about that. Well, like maybe to answer one question. Wait, I have to think about it. Like you might have a point, right? I understand what you mean by that, but my brain's like processing that, which means it's a good point. Percentage differential. Like I don't know, like if it has like an effect on the actual edge of the strategy. I think it's just a different way to like display the numbers. So in terms of the edge, it like doesn't matter because if you like apply Bollinger, it like adapts to like these pricing differences anyways. But if you use a percentage, like then you can allocate. Yeah, I'll think about it a little bit longer and then I'll give you like an honest opinion on that because I'm not like exactly sure. I have to like probably write down paper and look at the difference exactly. Can you build a bot with Dexys? I'm not familiar with MT5. I mean, yeah, you can build a bot with Dexys. If you want me to build a bot with Dexys, then you'll probably have to wait because right now I'm focusing on this. But Hyperliquid is implemented already. So like you could use Hyperliquid and then try to add another DEX. Can you disable the dashboard and the bot? I will start them myself. All right, so what we see here, like you see the spike, like what we see here is that like for some reason, oh no, this point was actually part of the legend. So now I think the basis chart look very nice. So yeah, we can like use this for our trading like this. But I think maybe like these arrows might be a mistake here. I'm not very sure. It looks very suspicious to me. Still needs like some testing. But like overall this basis looks good to me now, right? So right now the basis is like 59 or almost 60. So I think this is good. I use a similar setup and ratio is much better. Just try it and it should be simple because the basis can stay the same, but both prices should change and therefore you could lose money even though the basis hasn't changed. Actually, no, I would disagree with that because if I like sell the same amount, like one GC contract and buy one contract MT5, if basis is constant and price change, then my PNL remains the same because the price difference with both is still the same. So I actually disagree with this. Maybe I can like open a spreadsheet and explain what I mean. And maybe like you can also give one of your examples. But for example, what I mean by that is like if I zoom in. So for example, we have like price GC and price CFD, right? So let's say the price of gold is on futures is 4,050 and on the CFD it's 4,000, right? So here our basis is 50, right? And so if the price of GC of gold like rises to 10,050, right? 10,050, and the price of the CFD rises to 10,000, right? So the basis remains the same, right? So, or we can also do the other extreme example, like if it's like 1,050, so it drops, and then here's 1,000. In this case, it's still 50, right? So what happens in this case, like when we buy, like we buy at 4,050, we sell at 4,000. So our PNL is like 0 in this case, right? So because the basis didn't change at all, right? Our PNL is 0, and that's what we look at. So we buy at 10,050, which means because we bought the futures, our net profit is plus 6,000, right? And because we sold the CFD increases, we lose minus 6,000, right? So here we have minus 6,000, and 6,000 minus 6,000 is still 0. So our PNL is still 0. And same thing here, like if it decreases by 3,000, so we lose 3,000 on the futures, we make 3,000 on the CFD. So here our PNL will still remain 0. So yeah, that's one thing I disagree with. You should hedge by margin if possible, though. You're not perfect hedging if you do one-to-one contract, not one-to-one margin. Yeah, I'm not hedging by margin. I'm actually hedging based on the contract. So I hedge based on the same contract size, basically. Yeah. So it's always one GC futures against one lot on MT5, always, or one MGC against 0.1 MT5. They're always the same units of gold, and that's why it's always a perfect hedge, at least from what I understand. Okay, I'm actually super happy with this. Yeah, I think my assumption is that MT5 pricing might be slow, and that's why we get these like weird fills. But yeah, our server is going to raise. So today after live stream, I'm going to install TWS on this platform. I'm going to set up like 10K USD accounts, right? So 5K on TWS, 5K on MT5, maybe 2.5, 2.5. So we like test first, and then once we are able to generate some type of profit, then I will slowly increase the capital. So this is all we need. I'll also like update the UI a bit, like maybe add more like better overview of the open positions. But I think overall we're ready, right? The trading bot has been running the entire day. Like it hasn't crashed. It sort of like works, right? So I can just leave it as it is. And here, this is my Bollinger Bot. It works pretty nicely. Do you use VPS with MT5? Yes, I use a VPS. So like if you look here, right? Here you have my VPS on MT5. So here I'm connected to MT5. Well, not yet. I still have to set up the server. I will then connect to TWS, and then I can run this string bot 24/5, and then I can, not be in front of a PC all day. So this is the goal, right? So I guess like for today, this is it. I'm gonna work, on some minor changes off stream, like improving the dashboard, having a cleaner user interface, double checking the trading bot, and I'll set up the funds ready for tomorrow for live trading. So you're up 6,000 for the current year. Yes, we are up $6,000 for the current year. Also, a note is that we started like 2 months ago, right? So the 6,000 was actually made within 2 months. So if I show you like since May until August, right? So this is like where we started the 100K. So it's been like 7 weeks now to make 7K, which is pretty good. So I'm like, yeah, happy with the Hyperliquid project right now. I think I might come back to it later, right? But I would rather like finish this interactive brokers project now, than check some other symbols, maybe get into futures, because yeah, as I said, this strategy is working. I haven't touched it. I haven't like this control panel is running like 24/7 without any like how about like changes, right? Maybe once a week I restart the server. So when I restart the server, because Windows, needs to release the memory by restarting on a weekly basis. So I recommend restarting VPS at least once a week and just start the strategies that are running. You should be careful using VPS because the bot might enter whenever the micro deviations Bitcoin spikes past your Bollinger Bands. Brokers hate that because it's latency arbitrage. I mean, we'll see about that, right? I still think that the edge is still on the future side, right? Because we're just using the MT5 broker to hedge our exposure mainly. But we'll see what happens. And if the broker doesn't like it, they'll send me an email and we'll continue, right? I would rather just try it out and have someone tell me they don't like it. Because I've been training this strategy like last year. And the only thing that the brokers didn't like was the exposure. Like at one time I went like 5 contracts on gold, like GC contracts, right? So that's like today there would be like a 2 million position within a few seconds. But yeah, so I was contacted by a broker last year, but just one, right? The other brokers they didn't mind that much. So I think, but the thing is, because what happened is that within like 2 or 3 weeks, I made 80,000. Sorry, I lost $80,000 on interactive brokers, and I made $80,000 on MT5, right? Because again, we're trading on 2 different platforms. So probably I was on the B book, and the broker lost $80,000 because they didn't hedge my exposure. And so probably that's why they contacted me. And so I lost like, let's say I lost like 75K on Interactive Brokers. I made 80K on 95. I withdrew it, and the broker then texted me that they don't like my trading. And they reduced my leverage on gold to this day. And so I moved away from them. So just one story, how, I mean, they didn't deny me. Like legally, they can't deny the payout because there's nothing wrong with this type of trading. The only thing that might be wrong is like their execution model. Maybe they're booking you. Maybe their market makers have some, pricing inefficiencies that we unintentionally exploited. But that's their problem, not ours, right? Because the market makers, they provide the quotes and they offer the quote to be the counterparty. So we're just accepting the quotes they give us. And if they have a problem with that, the market maker should adjust their pricing, not the client, right? And so this is something that you as a retailer should understand, that if you're trading with a regulated broker, like an EU regulated broker, they cannot deny your payout, right? They cannot dispute the execution, because once you get filled, based on their terms and conditions, um, you have the right to keep that trade, right? So, but yeah, there are a lot of like bad players in this market who can. Once what happened once to me is like a broker deleted my position. And I was like, what the hell? Like a CFD broker can delete your position, like delete your profits, and that happened to me once. But it was not related to the strategy. It was like a different one. It was a funding arbitrage on gold swaps with one broker. So it's completely irrelevant to this strategy. But yeah, I was also shocked. How they determine B book or A book people? Is there some metric they use like Sharp? I mean, it depends on the broker, right? Most brokers are like just amateurs who just want to set up a simple, you know, MT5. Like opening an MT5 broker is super easy. I think you just need to pay $50,000 for a license, set up a team, and get the MT5 license. And like there are like a lot of businesses they can like set it up very fast. And so how the B-book works is that most clients are losing, right? Most people who trade on MT5, CFDs, OTCs are losing clients. And so if the broker knows that you're going to be losing, then they put you on B-book, which means they don't relay that trade to their LPs to hedge the exposure. They trade directly against you, hoping that you will lose money. And so knowing that most people are losing, they put you B-book. They put people in A-book when, for example, a client is like having high exposure, right? Because if that broker trades against you, it means they're also having exposure in the market. So if a client like me opens 5 contracts on gold and makes $80,000 in 3 weeks, then that's high risk for them, right? So because if I make $80,000, it means they lose $80,000. That's what it means when you're B-booked. And so maybe their risk team did not categorize me correctly. So maybe I was on the B-book in the beginning, and then I deployed a strategy that suddenly made a lot of money on their platform and they lost. And now they're salty and reducing my leverage. So it's more like a risk management mistake on their side and not mine. So they don't use Sharp. Like brokers, they operate like a casino. So they just try to identify the losing clients. So if there was a Sharp to determine which client is the most losing, I think that's the metric you would use. The most negative Sharp is their metric to determine the most losing clients. They belong to the B book. So it's not about like the profitability, but it's more about the volatility of the client. If the client has very high positions and is very volatile, they're more likely to go to the A book, right? If a client is consistently losing with very low swings because they just day trade, scalp every day, make 20, 30 trades per day, and consistently lose like on a weekly or monthly basis, they just belong in the B book. And so, yeah, that's what I can say about A book and B book. If it's lazy arbitrage broken, I should take money back. There are some financial court cases for this. Yeah, like there are some like if you look at like the terms and conditions, they have like protections. Like if you exploit latency arbitrage, stuff like that, they can probably ask for money back. But in our case, it's not latency arbitrage, right? In our case, we're using futures data to determine the relative value of gold between futures and the spot price, right? So I think this type of strategy wouldn't hold in court. Right, what is your opinion on copy trading strategy like copy signal from HyperDash? Well, I don't know what HyperDash is, but I would say like avoid copy trading strategies at all cost. Always like try to understand the strategy, try to learn the strategy, apply it yourself, because most of the time copy trading strategies will stop working eventually, right? Most of the times because most people don't know how to trade. And so the educators or the account managers, they make money from profit sharing or from the volume or recommending clients to the brokers. So I'm heavily against copy trading because first of all, you don't educate yourself as a trader. You depend on other people to manage your money. And so what my channel is more about is not about just giving you a trading bot and you're going to become rich, right? I actually prefer if you guys actually try to understand the strategy, know why it works, what the edge is, understand the risk management, also the emotional, manage your emotions. And so I think it's better to like try to learn the things yourselves. Your strategy is meant to be latency, but by mistake, the bot might take some latency trades because basis can spike for a short time during latency if you're using VPS. I mean, yeah, it could theoretically happen, right? But I think the broker would let me know ahead of time, right? Because if one trade randomly would be a latency spike out of 10 or 20, then it could be called luck, right? And I still think that the broker can't do anything about that, especially with like heavy regulation. I feel like if I just like if you trade with a Euro, like if you trade with SISEC or FCA, maybe the court case you're mentioning was maybe some offshore broker that is not heavily regulated and they requested the money back. But I think like with SISEC or FCA, this should be like almost impossible because the quotes that you see in the platform are the quotes again provide the market maker. If you're on the B book, that's a broker's responsibility, right? It should always be the broker's responsibility to manage their books correctly, whether it's A or B book, because if they lose money, that's the risk manager's job, not the client's. If the data feed is slow, then it's their problem to fix their own infrastructure, right? You can't blame the client for the for being irresponsible on your part, right? So, but we'll see. Never happened to me, with this strategy that the brokers had an issue. So I'll let you know. So tomorrow we'll start trading, and it's because they sneakily put it in their terms and conditions. Well, if you're concerned, just withdraw your money sooner than later. What I know is that we're not exploiting the broker here. At least, like from what I see here, is that like I still think that the edge is on the future side. So I hope that. But thank you for warning. Like cases like these can get very expensive. Let's say like you're minus like 20K in target brokers, but the broker denies you 30K. So you're actually down 50K in this case, right? Because you need to also cover the loss. They also remove the 30K on one side. That could get expensive, but still, I think highly unlikely. How does your bot execute the trades? Does it place trades both on Hyperliquid simultaneously, or does it wait to see Hyperliquid then hedges it 95? Well, first it places a limit order on Hyperliquid. So it tries to get a fill for a good price on Hyperliquid, and once it gets filled on Hyperliquid, it will then hedge it off on MT5 after that. Yeah, I will be fine though. I think it will be fine. Yeah, I also think I will be fine. But it's good to be a bit skeptical. Sometimes you never know because CFD brokers are very shady, right? CFD brokers can do very nasty stuff and such a thing can't happen on Interactive brokers, right? So maybe what we can take from this is choose your broker wisely. Okay, guys. So yeah, it was nice to see you all on live stream today. So as I said, I'm going to let's have a quick recap, right? A recap. So I'm going to share. I'm going to publish my. Where is it? Oh yeah, I wanted to publish my order book aggregator from multiple crypto exchanges, so you guys can try it out for yourselves. Again, I don't know like how to use this in like how to apply this in a trading strategy, but I think it's like a first step to maybe like start analyzing that. So I'm just going to share it, and wow, right now the order book is like very, very active, super active actually. Yeah, so I'm going to share that with you. I'm going to set up the server so tomorrow we can do some live trades and testing on our Interactive Brokers account, and that's basically it, right? So I'm going to deposit some money and fix some minor issues, and like work on some like other minor changes today, so we can start with the live trading tomorrow. And so let's answer some last questions. What if the edge flips to MT5? Well, then MT5 is going to pay me and futures are going to hedge my exposure. I always ask myself the question, where is the edge, right? Is it futures or is it MT5? I think sometimes it's both. Sometimes I make money MT5, sometimes I make money in Interactive brokers. So it's very difficult to tell. But I think the best way we can find out is like if we trade this strategy for like 12 months, we will then see where the money will flow eventually, right? So maybe that's the best way to figure it out. So it's going to be like a nice little experiment also where the edge actually is. Okay, guys. So thank you for joining today's live stream. It was very nice to see a lot of you guys today. And hopefully I'll see you guys tomorrow and we'll do some live trading on our testing account tomorrow on Interact Brokers. So take care and have a good day. Bye-bye. The fees are too high to scalp Bitcoin future. You need to find an exchange that has low fees. You have to research multiple exchanges.